Good morning, everyone. Good morning. My name is Don Daniel, founder of Pill Method International, a better way to eliminate debt. And we are gearing up for our Pillars of Prosperity Conference. All right, let's see here. I've got an echo. There we go. All right, so we're gearing up for our Pillars of Prosperity Conference coming up in Orlando in January. And so you want to get your ticket now. You want to get your tickets now. And we're going to be putting up a banner. So you can go to PopClive, POPCLIVE, poplive.com and get your early bird ticket. This is the full price ticket. It's a $200 ticket. But you can get in to our early bird situation for 175. So let's take this off and say good morning to you all. We're getting ready to get started here. And today's show is on how to build wealth through real estate in unconventional ways. All right. How to build wealth through real estate in unconventional ways. You want to be here for this today. So let's go ahead and get started. And here we go. I am so glad that you're here with us this morning. We're going to you're going to be with us for a good while today. And we're going to be learning some basics that most real estate investors overlook completely. Listen, if you're in real estate investing, how many of you have heard that you make money when you buy the property? Well, I mean, of course, you want to buy the property at you don't want to buy it at retail. You want to get it under market prices, all right? So that you walk into your property with equity. You also want to be able to rent the property so that you can at market prices so that you can cash flow. And if you have a loan on the property, your rent has to cover the loan, the taxes, and the insurance, and your profit. So if you really want to make money, then you can't overlook what we're talking about today. Today, we're talking about all your expenses, and the most expensive thing you have in real estate is not the taxes, is not your insurance, but it's the cost of borrowing money. And I also have with us today a couple of real estate investors, and we're going to bat this thing around and talk about how people are overlooking interest cost as a true expense and how you can drive that cost down by 75%. These are some of the things we're going to be talking about in Orlando on January 31st. So let me go ahead and put that up on the screen as a banner so that you guys can see what we're talking about. And go ahead and let me see for conference info. There it is. Okay. For conference info, you want to let me see here. There it is. Text the word PILL. Text the word PILL to 256-215-9496 for conference info. Text the word PILL to 256-215-9496. All right, let me introduce you to our guest today. We have Ms. Pamela Phelps with us today. We're going to add her to the conversation. Miss Pamela, how are you? And we have Mr. Tyrone Williams. We'll add him to the conversation as well. Tyrone, how are you, sir?
I'm doing fine, doing very fine. How about
Okay.
yourself today?
I'm doing well. I'm doing well. Listen, let's jump right in to the conversation. Tell me, you're a real estate investor.
Correct.
How long have you been in real estate?
I guess really for 30 years, but I didn't really get serious probably till about 2016, 2017.
All right. Do you want to turn your camera on today or?
Oh yeah, I can. But
Okay.
I'm in a dark room spell. I don't know if it'll wait.
Okay. All right.
The camera is actually on.
Okay, you got it covered up.
No, it's not.
No. Okay, there you go.
Okay, there it is. There it is. There it is.
There you
Okay.
go. All right.
Yeah.
Well, listen,
Um,
great seeing you here. Let me go ahead and change things around. And while we're getting that changed up, um, Tyrone, tell me, um, w- are there any challenges that you can think of right now to share with our audience about real estate investing?
yeah, and I'm gonna turn the camera off since it's so fuzzy.
Okay, that's
I'll
quite
see
all
if I
right.
can shift
Yeah,
positions.
that's quite all right. We
Um,
can do that.
yeah. Um, I think the biggest challenge, like you're saying, it is really the cost of money, and we
Mm,
really don't understand that.
hmm.
Um, I've known it, I've been aware of it. I just didn't have a plan for how to counteract it.
Ah, okay.
And without a plan, you are destined to fail.
Okay.
So knowledge is what I have come to realize, and the type of knowledge that you're providing has given me a whole new understanding of how to buy, how to negotiate a deal.
Hmm.
Um, that if I had had that understanding back in 2016, 2017, I don't know where I'd be right now.
How about that? So
Yeah,
we're
that's significant. And I potentially get that everybody might not understand it,
hmm.
but it's one of those things that I come to realize everything that we know now, we came here not knowing.
Yes.
And there's a lot of things that we need to know that we don't get exposed to. Um,
Mm,
and I think that for what you have just enlightened me with, the understanding, it's transformative. And like I said, I wish I had understood this 8 years ago.
all right. You have some background noise competing with you.
Let me see if I can turn that. I got a radio on. Hold on.
Okay. Sounds good. So we have Pamela with us this morning. Pamela, are you available right now? All right. And we also have Jonathan Bing on the stage. Jonathan, how are you this morning, sir? And
On top of the world, Don.
all right. So, Jonathan, we're going to be pulling in all sorts of information today. Are you going to? I know you're very very busy. Are you going to be able to contribute to the conversation today? Because part of what we're talking about is how to borrow money, right, for real estate investors and how to avoid mistakes.
Absolutely.
Excellent. Excellent, excellent, excellent. So I got. So let's talk a little bit about. I'm going to put some things on the screen right about now, and we're going to be talking about building wealth through real estate. And let me share that with everybody. So we're going to be changing screens right now. Put this over here. All right. And let's see, pull this up. All right. Let's see here. All right. Where did that go? There it is. All right, folks. Here's what we got. If you're here in Clubhouse and you want to see what we're talking about, you want to hit that link at the top of the page. All right. Hit the link at the top of the page and you can see what we're talking about today. So let's go ahead and put that on the screen. There
When you
we
say
go.
when you say hit the link, it says stream this audio?
No. This is for people on Clubhouse.
Oh, okay, cool. Okay.
You're good. You are good. All
Okay.
right. Yeah, this is for folks on Clubhouse. So if you listen, if you want to see what we're talking about, make sure you can pull up YouTube or Facebook on a different device so that you can see where we are in what we're talking about. So I'm going to put this on the screen right now. There it is. How to build wealth with mortgages and all other debt. How to build wealth through mortgages and all other debt. You want to be able to see this. So we are right now, we are live. The Pill Method is live on Clubhouse, Facebook, LinkedIn, and YouTube. All right. If you want more information about what we do, make sure you write this down. All right. ICE10K.com. ICE10K.com. All right. And we're going to put that on the screen. And also pillmethod.com. We have a book out. It's called The Pill Method. It has been a 6-time bestseller on Amazon. So you want to check that out. You can also get the book at ice10k.com. There's a link there for the book. So what we're going to be talking about, ladies and gentlemen, is that 90% of people will never own a home free and clear, whether they're in real estate or whether they are a residential home buyer. And all that really means is that people will never be able to gain the equity that they really could gain, all because they don't understand how loans actually work. And today, we're not going to be talking about how to get the right loan for real estate, which is very important, but how to leverage that loan. Okay. So we're going to be able to leverage that loan. So make sure that if you're on with us today, you can mute out everything in the background. All right. So I have Miss Pamela with us this morning. Miss Pamela, why don't you unmute? How are you doing this morning? Pamela, can you hear me? You're muted right now.
I'm not sure she can hear you.
I don't think so. Yeah, I see her, but I don't know if she can hear me.
I can hear you, Ty.
Oh, okay. Well, he's saying good morning to you.
Okay.
I'm not hearing him. Let me see here.
All right. If you can hear him, you should be able to hear me. Maybe if you go back out and come back in. Let her know that, Tyrone.
Yeah, he said, Pam, he said go out and then come back in.
Okay.
All right. So yeah, she should be able to hear me as well. All right. So listen, let's talk about that for just a second. I want to show you some things that most people are unaware of. And Ty, you can jump in on this anytime you want.
Okay.
All right. So let me see. So what we're going to be talking about is how to manage debt better without refinancing, without change to your budget, and without sacrificing lifestyle. And I want you to tell me, Ty, if this is true for you as well. What we're teaching here at the Pill Method, you will not hear from your accountant, from your financial planner, or from your banker, or even from the person that sold you your first, second, or third mortgage. Would you?
Yeah. Your loan consultant will not tell you this.
Okay. Yeah. And do you think there's a reason why they don't tell you?
It directly goes to decreasing the value of what they're selling on the back end. Not that they won't make good money, but it takes them from 3,000% to 100%, 150%, which would be great in terms of would really give people the opportunity to have some sanity, some security, some financial security, which is what we all want.
Okay. So let me bring Pamela to the stage. Pamela, how are you doing this morning? All right, you're muted.
I'm sorry. Good morning. I'm well. Thank you.
Good morning, Pamela. You have a background as a real estate investor.
I do.
Okay, excellent. So, folks, listen, if you want to be part of this conversation, you can come on the stage uh, on YouTube. You can click the link that we have provided for you in the comment section. Or if you're here in Clubhouse, you can, I put the link in the chat. Or if you just want to see what's going on, the link is at the top of the page. So you can see that as well. So I was just talking to Tyrone, and Tyrone, from what you've learned about the P.I.L.L. method and how we look at debt, have you ever heard this before from anybody in financial services, whether they be accountant, a CPA, a business major, even if they have their PhD? Have you ever heard any of this before on how to cancel interest?
No,
Why do you think that is?
because canceling interest goes directly to affecting, quote unquote, their bottom line.
Okay, so is it? Do you think that? Do you think that the people that you've run into are withholding this information from you, or do you believe that they just don't know it?
I believe they absolutely just don't know it.
How about that?
Yeah, they don't know it. I mean, it's amazing. You know, there's times when I'm talking to insurance agents and stuff, and I realize there's things they don't really understand about the product they're selling
Mm-hmm.
on the back end if you're trying to actually use it. Because it's like they're just giving a pitch to induce you to, but there's a certain level of what do they call it? What is it when they don't tell a politician the whole story? It's he says there's a level of they can't tell you what they don't know, so they are not suspect. They're not indictable
Right.
for withholding the information. So it is,
Uh,
I believe, it's purposely kept from them,
mm-hmm.
such that if someone were ever to make the claim, "Why didn't you tell me that?" they have a plausible deniability that they didn't know it themselves, and they're not making up that story. They legitimately do not know it.
Okay. So the people who own the banks, the people who own the lending institutions, are not sharing that, are not sharing this with their employees.
Yes, they're just employees. They're withholding that information because it's not. There's a need to know mentality, and if they knew that, they would not sell the products that they're selling.
All right. So, so Pamela, tell me, do you have the same opinion about the knowledge of how lending actually works?
I would agree. I do not believe that that the most of the lending institutions, most of the brokers that I've spoken with, I don't believe they have this understanding. And
Mm-hmm.
I believe that if they did, it would seep out. You know,
Mm-hmm.
I believe, because I've been into some, some pretty significant conversations, exploring different avenues for how can I accomplish some of the purchases for various properties, and what are some of the strategies and maneuvers. I don't think that they understand it. Well, let me say, not at the level that interacts with the public. I don't think they understand it.
Okay, so you found out, all right, you found out that understanding how loans work is very vital, especially when it comes to the right loan for the right purpose if you're a real estate investor, correct?
Absolutely.
Okay. So let me get in here just a little bit deeper. Let me go ahead and put this on the screen. So the ability to read and defeat an amortization schedule is not taught at any level of financial education. Folks, the key to understanding how lending works is to understand the tools that the bank uses. All right. And when we understand the tools that the bank uses, how they generate income through what we call interest. I call it rent on money. All right. So, and let me tell you something. I'm going to start out with this. I am not anti-bank. I absolutely love the bank. All right. And why do I love the bank? It's because they have a product. Right. They have a product for me to buy. And let me ask you something, everybody on the stage. When you're buying something, do you want to pay retail or do you want to get whatever you're buying at wholesale?
You definitely want to get in wholesale.
Okay. So we're going to be talking about how to borrow money cheaper. That way you can increase your profits. Okay. So before we get into all of that, I have Jonathan Bing on the stage. Okay. Jonathan, how are you doing this morning?
I'm doing great. Yourself?
I think
Doing
I have to
fine.
come back in again.
Doing fine. So, all right. So let me mute you there. All right, Jonathan, tell me, um, when it comes to talk to us about selling money. Most people think about money as something that you borrow, but you talk about money as something that is sold.
Yeah, money is definitely a product. Okay, a lot of people don't understand that money is a product. I think it's the only product that you purchase without knowing that you're purchasing it. So a lot of people, when we grow up, we never get the education. People never educate us that money's a product. That we're always taught that money is something like very mystical, something that you got to work for, you got to earn, and all that stuff is there. That's true, but money's a product. And when you get down to it, it's just like a bar of soap. It's like a car. It's like a sofa. It's like a bottle of soda pop, whatever. It's that's all it is. It's a product, and you can sell money. And we all buy money every day. Hell, we all buy our own money at times when we go and use our debit card. For our money, and they're charging us 3%. A service fee for using a debit card. We're paying to use our own money, so it's a product that we buy often. Absolutely.
All right.
100%.
So, Jonathan, you are in the business of selling money, and have you ever run across somebody who is in a particular loan product and find out that they're in the wrong product?
That's quite often that happens, and you and I ran across that just the other day,
Mhm.
and so people buy the wrong product. Sometimes, like I said, money is a product. Sometimes you need. There's just some feedback there.
Yeah.
So yeah, sometimes you walk in and you think you need a mosquito spray, and you buy ant spray,
Yeah.
but and it, yeah, it kills. It just doesn't kill what you need it to kill. But what I'm saying is, the person that we were speaking to had a free and clear property,
Yeah.
and they needed money, to do a renovation, and they met with someone, and someone gave them a renovation loan
Mm,
where they say, okay, they have free and clear property. Let's just say both properties worth $200,000.
you right.
Let's say after they complete their rental, it's worth 400,000. Okay,
Hmm.
and out of that 200,000, they needed to borrow, I don't know, $150,000 each. You know, which they could have done easily because the property's worth 200,000 as is. Um, someone gave them $150,000 renovation loan, which means like, hey, they needed money to get started, to do the renovation. But what they did was say, okay, on a renovation loan, we're gonna give you we're gonna give you 150,000, but you do the work, and then you come to us, show us the work, and then we'll give you the money. So essentially, they borrowed money, to they put their equity in the bank's hands, essentially, where all they had to do was a simple cash out refinance, took the $150,000 at one time, and been able to do the work at their leisure for each property. Now they're trying to do draws and everything else when that wasn't necessary. So it's unfortunate to actually witness this. It's actually heartbreaking to see someone be put in a product, because now we have to go and look at the rest of their portfolio, grab some properties out of their other portfolio, which aren't, free and clear, refinance them, okay, so that they can get the money out so they can complete the product. I mean, so they can complete the rehab. All the while having the rehab money sitting there that they can't access because they can't do the work without the capital.
Okay.
That's sad.
So a couple of things, Jonathan. Why do you think the person sold them that product? What was in it for them to sell them a product that that totally did not suit their needs?
There's one or two reasons.
Mhm.
Just ignorance, not aware, don't know what they're doing, and just don't know what they're doing. Or two, uh, they figured that they will get them to do a short term loan because these are bridge loans. These are
Mhm.
even though they're planning on holding products, they're fixing hold flip. So it's a fix and flip essentially. They're bridge loans where they have a 12-month term to complete the project, 12 to 24-month term to complete the project. So they knew that they can put them in this product. If they put them in this product, they have to come back and get a second loan. And that second loan is the permanent loan for the 30-year product. So, yeah, so either way, you look at it, either if it's incompetence, which is bad, or it was just they did it to serve their own purpose where they made the most money off of that.
Okay. So Jonathan, let me get into this right now. Um, to the type of loan that we're talking about is for commercial purposes, right?
Yes.
Okay. So if anyone in the audience wanted to know more about this so that they could avoid this, um, do they need do you need a license to do this type of lending?
Guys, let me just say this right here. And Don, um, I guess these are Don, that's the clients.
Yeah.
That's in the pill method, right, Don?
Right.
And so Don has this knowledge because Don actually, I do a course, and because what I do is I teach people a lot. Like this is the best kept secret out there.
Mhm.
Most people aren't aware that you're able to go out there and sell money without having to have money. Okay, where like Don, when Don reached out to me, these people they're gonna borrow. It looks like they're gonna have to borrow. The one loan is like 500,000 some now, $500,000,
Mhm.
and the one's like 200 some thousand, whatever it is. So they're gonna have to borrow close to $700,000. Okay, to walk away with $100,000. And Don, myself, or any one of you guys to loan them that $700,000 without having to have a dollar in your bank account. Because you're able to broker that loan, essentially sell them the capital, the money that they need, without having to have a license or not having to have anything.
Oh, wait.
Basically, education, your background doesn't matter, your credit score doesn't matter. You don't need a license to do so. Your and experience. Some of the lenders want experience, but that's where the training comes in at. But essentially, we teach that you don't have to be licensed to do so. And so, these people came to me, and I'm not using any of my licenses to do this loan. This because of the commercial product. There is no licensing requirement. So any one of you guys in this audience or anyone that's on the stage is able to do it without having to have a license. So it's the best kept secret out there. Uh, Essentially, why sell the house when you can sell the money for the house? Why sell the yacht when you can sell the money for the yacht? Why sell the plane when you can sell the money for the plane? I always say selling money is the best freaking product out there because my product, which is capital, which is money, you can use it to buy every other item out there. Okay, so my money doesn't have to be located in Michigan or Maine or Florida or Georgia, or Illinois, because my money goes everywhere. And I mean, my product can be spent any and everywhere. You can buy the house in Michigan, they can buy the business in Maine, they can buy the gas station in Missouri,
Hmm.
and so that's huge. That's essentially what selling capital allows you to do.
So, Jonathan, before we get any deeper in here, because you have said some things that probably have piqued some people's interest. We have about 10,000 followers on a little under 10,000 followers on YouTube. We have over 60,000 followers on our Instagram. So you're saying any one of them, if they're hearing you right now, they can learn from you how to sell money. Give them some idea of how much money they could make without a license selling money.
Oh my God, it's endless. I mean, if you want, I can do a presentation. I have a presentation. I can give you a visual.
Jonathan, we do want you to do a presentation. I want to hear this. Tell us when you're doing it, and we'll be there. Okay.
So,
if Don want me come on camera.
Jonathan, listen. The reason why I brought everybody in here is not just to teach them how. We're looking at several different ways to create revenue. All right, several different ways to create revenue. Your way is just one of those ways. We're going to take a look at creating revenue through real estate, creating revenue for providing financing, creating revenue by borrowing the money at a lesser cost. We're going to be here for 3 hours, folks. We got plenty of time, Jonathan. So, Jonathan, you can let me text you the link and you can come on the YouTube. And when you're clicking on that, make sure when you're sharing that, you share your entire screen. That way you can share everything. Okay. So I'm gonna get the link ready to share with you. Okay. So that you can share with us how that is done. Folks, this is going to be an exciting time today. All right. So Jonathan, how much time does it take to learn this? And tell the folks, before you even get started, tell the folks, will they walk away with enough information so that they can start lending money and they can get this information for free? Is that true?
Yeah, guys, here's the deal. Okay, this is I call it the best kept secret in America, and I think it's intentionally kept a secret because it gets you off that hamster wheel. Okay, you can make 6 figures a month doing this. Okay, easily. Okay, and how long does it take to do this? You can learn the thing. I teach it in 4 or 5 days. It's how long I teach it. But when you look at this, folks, I want you to think about this. If someone wants, let's say, I don't know, and it's crazy. Someone wants to buy a laundromat for $2 million. Let's say a gas station. Let's go with the laundromat, $2 million. Okay, they come to you and they say, hey, they tell you like, hey, I'm looking to buy a gas station. People that are doing these things all the time. I need to borrow $2 million. You certainly don't have $2 million. What you are able to do is you're able to broker that deal. You're able to go to the lenders that's out there, and there's a bunch of lenders out there, folks, that does not have a retail shop. And when I say doesn't have a retail shop, means they don't go direct to consumer, which means that they only deal with brokers. Okay, and so you're able to find a loan for that person for that $2 million, and you can charge up to 6% of that $2 million. Now, typically you want to get 3%. And so 3% of $2 million is roughly $60,000, folks. Okay. So you can make $60,000 in that one transaction. And when it's all said and done, you really truly only put about 6 hours worth of work in that transaction. It may take a month to close, but you put about 6 hours worth of work collecting the application, collecting the documentation, and going back and getting the conditions. So it really truly is the best kept secret out there. And not only are you able to do it for real estate loans, you're able to do it for business loans. If people need equipment financing, they need working capital, they need a line of credit, you can make up to 15% of that transaction on the business side, 6% on the real estate side, which we call commercial loans. But on the business purpose side, business loans, you can make up to 15%. you're selling money. Who doesn't need money? People that don't need money, that's not even thinking about getting money. When they found out that they can get money, they do it. If you don't believe me, look at all those people that got arrested for PPP loans. None of those people, none of those people truly they lie to get that money. Your product, people are lying and going to prison for every day to get. I land.
All right, Jonathan, go ahead. I just text you the link. Make sure that you go in on Chrome, and then when you want to share your screen, we'll talk about this. So you want to make sure you're choosing show the entire screen, not just your presentation, but the entire screen, and then we can see it, and then you can do that. But while you're coming into our YouTube channel, right, to do this, I want to talk to Tyrone and ask him, Tyrone, why are you so interested in learning this? Okay, because you've been learning a lot about money lately.
Yeah, Guy. Because of the business I'm in, and I haven't told you the backstory, but I have a business model that bringing the proper information to individuals in the affordable housing space.
Okay.
The information that you bring will help make housing more affordable for people.
Yes.
And what the information that Jonathan brings will help get them access to money through people that will be honest with them potentially.
Well, but first of all, let me let you know that to be able to lend money without a license, this is for business purposes only. It's not it is not for people who want to borrow money so that they can occupy their house. This is for people like you who are investors, who want to who maybe they have a doctor's office. They are a dentist and they want to buy equipment. You can lend them this money. If they're in the trucking business and they want to buy trucks, you can lend them the money. This is what Jonathan is talking about. And in fact, me as a business owner, I took the course, and that's how I that's how I share the information with people, because I am a business purpose lender to lend people money for real estate or whatever business venture they need. I even took the course. There are multiple ways to earn income, to produce revenue that a lot of us are unaware of. And when it's all said and done, we're going to show you how to get to the money. We're going to show you how to share the money. We're also going to share with you today how to pay back that money at a fraction of the cost. And I'm going to tell you that Jonathan doesn't care. You know, I've helped people. Let me tell you, I've helped people that Jonathan and myself, we have gotten people loans. Okay. If they pay that for a 20-year loan, if they can pay that loan off in 7 years, it doesn't affect our income, because there's a commission that is paid out on the loan, period, up front. They can pay it off the next day, and it doesn't affect how much money you make as a lender. Were you aware of that? Tyrone, are you there? If you're speaking, you're on mute. And Pamela, you can jump in anytime.
Hey, I just got a call. I'm just having to take something real quick. So Pam, go ahead on and address that.
Well, I'm all ears. I have my pen, and I want to see the recording of this. You have my full and undivided attention.
All right, I'm adding Jonathan to the screen right now. Jonathan, I see you're there. What's going on, man?
No, I'm not there yet.
Oh, you're not there yet. Okay.
No, I'll be there shortly.
Okay, okay, not a problem.
But Don, what I'm glad you did, what I'm glad you told him was you actually said to him, guys, first of all, you can do this for any property, any kind of property out there. This is not about profit. This is more about usage. If someone's going to use this property, I don't care if it's a single family, if it's a duplex, triplex, I don't care if it's a oil rig. We had someone doing oil rigs down in Texas, off the Gulf, in Texas, the Gulf Coast. So you're able to do this. It's more about usage. That's what we're more concerned about. You know, what you're going to use the property for. If it's a business, you can do it all day long. If it's a property, you can do it all day long, as long as you, the owner, the purchaser, the buyer, it doesn't plan on occupying the property yourself. I don't care. You can have a cousin, a lover, or a brother, sister, or whatever child occupy that property. But if you're going to occupy it yourself, you aren't able to do it. You're not able to partake in it. So I'm gonna be ready in about 3 or 4 minutes.
Sounds good, Jonathan.
And then I'll put the whole presentation up.
All right. So listen, we just add somebody else to the. We have Paige Dream Investments. Are you there? Paige Dream Investments LLC.
Hey, good morning, Don. This is Greg. Yeah, I'm here.
All right, Greg. How are you, sir?
I'm doing pretty well. Definitely wanted to join in and listen into all the great knowledge you're speaking about on definitely good ways that we can handle this interest battle.
All right. So tell me, what is your great interest in all of this?
My great interest?
Yes.
I guess just the general, just different strategies on, I guess, when you make payments and what amount, I guess, to pay up front, things like that to tackle, get the principal balance down.
All right. Well, listen, we're going to take care of that. So right now, I have Pamela here. She's feverishly taking notes on what is happening here. So we're going to go ahead and mute you out there. All right. And Pamela, you're a real estate investor. You're going to be learning now how to pay the money back that you. How many properties do you have in your portfolio?
A dozen.
Got about a dozen properties in your portfolio. So would it be helpful to you? All right. And for some reason we're getting some static. Are you on a laptop today?
No. Let's see here if I can.
Okay. So you may want to come in on a laptop a little later, but answer this question first. Would it be helpful to you to gain equity in those properties faster and cheaper by cutting your interest cost by 75% on these loans?
That would be amazing.
Okay. All right. So we're going to be talking about that, folks. Right now, we're talking about how to get the money. And there are so many things out there that talk about how to get. I'm going to mute you right now, Pam. Let's see if we can get you in on your computer. And I think we might be able to take care of that static. All right. So we're not just talking about how to get the money, folks. We're talking about how to leverage it properly, how you can borrow money at a discount. All right. I don't care what the interest rate is. That's interest rate. At the P.I.L.L. method, we focus on interest cost. Okay. So your interest rate might be 5%, might be 7%, might be 9%. But you are in control, ladies and gentlemen, of how much interest you actually pay the bank. Oh my goodness. You do not have to pay all of that money. And we're going to talk about different ways of getting the money. We're going to talk about different ways of paying back the money so that you can leverage that money to the hilt. Leveraging means this, folks, just think about it. Putting in a little bit of effort, but getting a great return. So if I can borrow money and I'm supposed to be paying $300,000 in interest, and I can still make money. But what if I could pay $75,000 in interest to acquire the same property without impeding my ability to invest in other properties as well? We're going to be talking about how to leverage that money, how to get people money, we're going to be doing all of that today. So Tyrone, this is going to be a bonus day for you, isn't it? Oh,
Definitely, most definitely.
All right. All right. So we're going to be now. You learned a couple of things last night. We did a short session, and you wanted to be with us today to talk about it. In depth, but you learned how easy it was to save money in interest.
Yes, absolutely.
Okay. And so let me ask you some questions, and so that while Jonathan is getting ready, that we can I want to talk about some things that are counterintuitive. Prior to us talking, did you believe that the lowest interest rates were the best interest rates?
Yeah.
Okay.
I kind of knew there was a trick. There was a hitch to it that was not necessarily in my best interest. I just did not understand how it is. It's like giving somebody crack and then expecting them not to get addicted. That's what it is. Yeah, it's deceptive.
All right. So do you still believe that the lowest interest rates are the best ones?
No, they're not. They're not.
No, okay.
They're not. And I can tell you what's really kind of funny, because I bought my first house in the 80s, and it was about $70,000, and I think my interest rate was about 14%.
Okay.
And my notes were lower because it was a much smaller amount.
Yeah.
But I kind of understood what you were saying, or what you showed me yesterday. Then I just didn't have those extra 2 columns. But I noticed what you noticed, but I wasn't as on the spectrum so much to go dig into it. I wished I had.
All right. So while Jonathan is coming up, I'm going to put that on the screen to talk about what you just mentioned. All right. So let's go ahead and share this right now. So we're going to put this presentation on the screen. All right. And all right, let's see here. YouTube. Brett Whistle. There it is. Okay. So there we go. Let's share the screen now. All right. So here is it said a $70,000 mortgage. Okay. Okay. 70,000, and your interest rate was around 14%. Was it a 30-year loan?
Yeah.
Okay, great. So here's what we're looking at. Okay. So here's so I'm going to share a little bit. Your principal and interest payment was right around $829.41. My guess is you were renting the property out for more than that.
Yeah. Well, this was one of my first purchases. So I was buying it, and I had an apartment below. So yeah, I was renting out. I was living up in time. I was renting out. It was like a duplex. Yeah.
So that's called house hacking.
Right.
Okay. So you were house hacking, and the rent that you were charging, did it cover some of the mortgage payment or all of the mortgage payment?
It covered all the mortgage payment.
What? So you had somebody, you were living in a house that you were house hacking, and the rent covered the entire mortgage payment and then some? So you were actually making.
For some reason, it was lower than that, but I think after insurance and everything, I was only paying $750.
Right.
I think I was charging $700 to the person.
Okay.
But that was, I had PMI, insurance, property taxes, everything. I think I might have been contributing $30, $40.
All right. So you're still doing pretty good on this. Let's use this as an example. Let me show what most people would see, and then it would cause them a great distress. Okay. On a $70,000 loan, all right, at 14%. I'm talking to all you real estate investors right now. If this thing is making money, you do not need to refinance into a lower interest rate at any time. Don't do it. Okay. Make money where you are. I'm adding Jonathan to the stage right now. Jonathan, how are you?
I'm doing great, Don. How are you?
All right, all right. So I'm going to go over this quick example, and I want to show that the total interest paid on this is $228,000. What? $228,000 interest on a $70,000 loan. And why do most real estate investors not care? It is because they're making money on the front end. If I can charge rents and make more than my payment, that is called cash flow. And that's what most people are looking at. They're only looking at the cash flow. But let me show you something very interesting about this loan. Okay. Where on that loan, $12.74 goes to principal, $800 goes to interest, ladies and gentlemen. I want to show you this. And I showed this to Tyrone yesterday, and it blew his mind. I asked him, I said, now, if you make this payment on the very first payment, your second payment, if you started in January, your second payment would be February. How much is your principal payment for February? In this case, it would be $12.89. So if you make your first payment here, do you have to wait, Tyrone, to give the bank this next $12.89?
No, you do not.
If you paid it up front, if you paid it in January as well, would you be paid down to line 2 on your amortization schedule?
Yes, you would.
And your next mortgage payment would be on line 3?
Yes.
Okay. So what would happen to the $816.52 on line 2?
It evaporates.
You don't have to
evaporate says that it existed. It's non-existent.
So you don't have to pay that.
Yeah, you never that just it did not exist.
Wow.
It's like an Avengers movie with the time stones, the timeline was changed. It never happened.
So you eliminated line 2. You could eliminate line 2 from your amortization schedule for only $12.89. Do you think this might be why most people don't understand how a loan works?
Yes.
Okay.
No, it's too simple and it's too impractical for most people to get their mind around that it's on the paper, but it's not real.
Okay, so I'm going to come back to this in just a minute, but I want to show one more thing, and then we're going to bring Jonathan on to talk about how to get the money, ladies and gentlemen. Not only how to get the money, but how you can be a provider of the money. But I want to take a look at 12 months worth of principal payments. Okay, 12 months worth of principal payments here, from $12.74 down to $14.48. If we add it all up, cumulative principal comes to $163.11. In other words, if we pay on time every single month, my payment is discounted by over $800 every single month, and it only leaves this much to be applied to the loan to help pay it back. So that's a total of $163.11 for 1 year. While your tenants are giving you money, if you're a real estate investor, your tenants are giving you the money, okay? And you're making the profit every single month. But out of the money that they're giving you, you are paying the mortgage on this. So you have, at the end of 1 year, you have an extra $163.11 worth of equity. But how much interest did you pay to get that, Tyrone?
Oh, you pay pennies on the dollar.
Okay. Are you seeing can you see my screen?
Yeah. You're paying under $10,000. Yeah.
So you're giving them $9,789.81 out of your money goes to interest just to pay the loan down by $163.11.
Yeah.
So Tyrone, you learn that if you're going to pay $163.11, do you have to pay it in 12 monthly installments?
No.
If you had it, you can give them the $163 on top of your first payment in the first month.
Yeah.
And you could be paid down to line 12 in the first month.
In a heartbeat.
And your next mortgage payment for February, if you started in January, your next mortgage payment would be on line 13 of your amortization schedule.
Correct.
Then what happened to all the interest payments between line 2 and line 12?
They never existed.
Oh my goodness. Folks, we got more of this coming up. You think this is something? Wait till you hear what Jonathan Bing has to share with us. Jonathan, come on, man.
Hey.
Listen,
Don, let
yeah.
me share something with you though, and this is what got me when I said blew my mind.
Yes.
If you divide the 97.89 by 163,
Yeah.
for every dollar that you got toward principal,
Yeah.
you gave them $60.
What?
Yeah, that's effectively what that's saying. That's how I look at it as an engineer running numbers. The cost of that money was for every dollar that they gave me credit of paying off on my loan, I gave them $60 for that privilege that they gave me. Just it's simple. Just divide.
Wait a minute. Wait a minute. Let me ask it in a way that I can understand what you're saying. All right. And I've been doing this for a number of years. So you're telling me for every dollar I received in equity, the $163.11 that went to pay the loan down, it actually cost me $60 in interest for every dollar?
Yeah. I mean, divide. You do the math. That's what, when you were talking to me and I said, what? That was the calculation that I did that said, this is straight up highway robbery.
So listen, folks, here's the question before we bring Jonathan on. Here's the question. If you're not paying attention to your interest cost and you're looking at your equity, but I have to pay such an exorbitant amount of money for my equity, no matter what my interest rate is, do I really have equity when I look at my interest cost that I didn't have to pay? In other words, if he gives them the $163.11, okay, he pays the loan down. If he pays that up front, he pays the loan down to line 12, not for $9,789, but for only $816. That is quite a difference. That is a savings of $8,974 he never has to pay to accomplish the same goal. Why not get your equity cheaper? Jonathan Bing, come to the stage, man.
How you doing, Don?
I'm doing fine. I'm doing fine. So listen, go ahead and click that present button and make sure you choose the entire screen. I'm going to take my stuff off the screen.
Okay, I'm going to share screen and all right, let's and the entire screen. Don, I want to go to my.
Okay. All right. So so go ahead, and when you click on that, then you just choose your presentation screen.
Okay, good. Yeah,
and then it'll pop up on here, and then I can present it for you.
Okay, give me one moment here. I want to.
Okay.
Can you guys see that?
Yeah, I can see it. Here it is now. There it is.
That's it. The business of commercial lending. You see that?
I most certainly do.
Good. All right, guys. So real quick, let me widen this thing out. Put this in presentation mode. There we go.
There you go.
All right. Did you see the entire screen now, Don?
I most certainly do. And you can that where it says on the bottom there, that strip, you click on hide, click the hide right there. There you go. So you have an unencumbered screen. Jonathan, you are in charge for the next few minutes to tell us how people without a license can make between 3 and 6% on a loan. And all we have to do is get taught by you how to do it.
Yeah, Don, really, it's up to 6% on a commercial loan, which is commercial real estate, and up to 15% on any other business loans. So there's a big difference there. Hey guys, my name is Jonathan Bing, Cincy Business Academy, and we're going to speak real quickly about the business of commercial lending and why to become a business loan and commercial lending broker. So, real quick.
And folks, if you are in Clubhouse and you want to see this, go to the link at the top of the page so that you can go over to YouTube. And when you get there, don't forget to click on join our YouTube channel and click that notification bell. Okay, subscribe and click the notification bell. Jonathan, it's on you.
Essentially, you can own your own business, your own finance company, be your own boss, make unlimited income with a complete sense of independence. You can have an incredible lifestyle, work where you want and when you want, full or part-time. Cincy Business Academy, that's us guys, a nationally recognized training company
with many years of continuous experience and the lucrative field of commercial finance have developed a simple program to train you in a high annual income through an easy learning process of providing commercial loans. So, guys, we make this as easy as possible. This is a service that nearly every business needs, especially those in these economical times. Because this is a recession-proof business, folks. People always need money. If the economy is good, they need it. If the economy is bad, they need it. So anyway, let's face it. The biggest problem facing most businesses in America today is the need for capital and to maintain and grow their businesses, their companies. What does that mean to you? It's an opportunity. The opportunity to be in the business of lending money to the 90% of businesses out there that does not qualify for bank loans. And when I say that, folks, believe it or not, 90% of the people that go to banks get turned down. All right, and they're turned down because of the fact that they have antiquated, traditional legacy methods of approving people. So, believe it or not, close to 90% of the people that apply for a bank loan is turned down, and they don't know where to go from there. And that's why this is so important. That's what Central Business Academy does. We teach you how to provide the loans to all types of businesses, businesses of every size and type, businesses that are young and businesses that are mature, poor credit risk or good credit risk, modest loans of $5,000 or mega loans up to $500 million or more. We can teach you more than 30 different types of loans, give you direct access to the lenders that are able to make these loans that the banks cannot. We give you all the tools you need to earn commissions up to 15% on business loans, folks, and hold your hands for the whole process and give you the kind of first-class ongoing support that's needed to succeed in this great business. We show you how to work smart, not hard. We teach you the ins and outs of the business, and you get started. That allows you to get started from day one after leaving training. Now that we got that out of the way, folks, let's jump into the presentation.
So, Jonathan, can I ask questions along the way?
Of course, let's do it.
Okay. All right. So first of all, is it really like that? You know, sometimes people tell you stuff, and then when you get into it, it turns out not to be so. I really don't need a license of any kind to lend this kind of money.
No, you don't, guys. And this is the one time the federal government got it right. Remember, we are in America, the United States of America, which is a capitalist society. Okay, we're capitalists. We're not communism. We're not authoritarian capitalists. So, in order for a capitalist society to succeed, you need access to what? Capital. So, now if I was doing a loan for, let's say, you, Don, and a property that you're going to reside in, you get all of the protections that's afforded to you because you're a consumer. And because you're a consumer, where you're going to consume that product yourself, you, Don, I have to be licensed to do that loan, and, along with a whole bunch of other regulations that's in place. All right. This is the only sector of the finance industry that you're going to get in without being licensed. Typically, you're going to need a license from the state, federal government. I mean, hell, you may need your Series 7, whatever when you're finance. This is the only sector that you are not required to be licensed in. So congratulations, folks. You guys came on to a show with Don where you guys are able to find the one segment of the finance industry that does not require a license. So I just want to put that out there. And that's important, folks, because of the fact that by not requiring licensing, it opens it up. And the reason it doesn't require a license is because the federal government says, hey, businesses should be allowed to do business with whomever they want. See, they can't take that same approach when it comes to a consumer, because the consumer needs to be protected. A consumer, it's an emotional purchase at times. You're buying a car, that's a big emotional purchase. You're buying a house, that's a huge emotional purchase. Business is business. And so they don't need the same protections that a consumer needs, because a business should be able to make bad business deals. You guys agree that if I'm a business person, I should be able to make a deal that is perceived to be bad? Because guess what? There's a lot of people that made bad deals that turn out to be the best deals ever. Okay. And because they're like, that would never work. They told FedEx that it would never work. Overnight delivery would never work. It's a bad deal. It's a bad investment. But it's the most successful parcel carrier out there right now. So, and that's why that's the way it is. Go ahead, Don.
All right, Jonathan, thank you so much. Let's jump in. People are dying to learn.
Yeah, well, best of all, you won't have to sell, Don. All you have to do is let people know that you have access to money and they'll come to you, which is so true. That you don't have to sell money. Money sells itself. If you don't believe me, just go out there and tell your friends, put on your social media, like, hey, I just realized I got an extra $50,000. Who wants to borrow it? Your inbox will be full. Okay. So anyway, we spend a great deal of time explaining how to accomplish this quickly and easily. We've been doing this professionally and teaching this for many years. No efforts wasted, no pipe dreams, just practical business solutions for you to succeed. So, all right, we're going to talk about real quick in the next 10 minutes or so. We're going to talk about Sense Business Academy, getting started, today's objectives, why commercial lending, the Play Excel, which is the course, and questions. So, what are we? We're a team of knowledgeable, experienced real estate professionals with over 100 years of experience combined, experts in the commercial and residential, the commercial and business and residential lending, experts in learning and development, mentors, coaches, and advocates. What we are not attorneys, we're not accountants, we're not direct lenders, guys, and we suggest that meeting with your attorneys and your accountants, other professionals, if you show desire. This information that you're receiving is for learning purposes only. All outcomes will require commitment and effort to reach any level of results. Just want to put that out there as well. All right. So, and all results that we tell you about are real, but not promised. So, about Sense Business Academy. This is one of our students, Lofty, guys. Lofty, his first year in this business, and to be fair, Lofty owns a brokerage in Brooklyn, New York, a real estate brokerage, and he would always call for a mortgage broker when he had these commercial loans. Lofty met me. We spoke. Lofty jumped into our course. He did over $600,000, $660,000 his first year in the business. $660,000 is what he earned. And guys, and that, Lofty had, he had a real estate business. We had a young woman, Tanya's not so young. We had a woman that is out of the Baltimore area, Baltimore, Maryland, had no experience and was a social worker. And her first year, she did $1.4 or $1.5 million in income for herself. That's income in her pocket, And we have Jonathan Drummond, and Jonathan Drummond.
Yeah. Well, actually, Jonathan, I know Lofty. I know both those people. All right. So I know all of the people that Jonathan is talking about. I have met personally, close and upfront, not on the phone, not over the internet. I met them personally, and they told me the same stories.
Jonathan Drummond, his first year, he did over 800,000, a little less than 800,000. He's making over 3 million now annually off of this. Guys, once again, no license, no investment. So basically, that's who we are. We have over 400 plus graduates. This is me, guys. 20 plus years in the real estate industry. It's my partner, Daphne Christine. She's here as well. So basically, you're going to, I guess, build a foundational understanding. We want to give you a foundational understanding of business purpose loans in the commercial lending field. Have you learn about the benefits of those careers, and we'll leave you with the information to take the next steps. That's the objectives. Who's the ideal lending business and lending? I guess business commercial loan broker. You. Okay, as long as you guys have a learning mindset. Okay, compassion. Okay, when I say compassion, because people are going to come to you. Your job is to solve problems. If you're able to solve problems, you will get paid. The harder the problem is to solve, the more money you make. Okay, and Don, when we were on the phone, when those people called you,
yes,
and they had a problem, and you heard what I said. The first thing I said is, "What problem can I solve for you?"
Right, but even before then, they brought me the problem, and I said, "Here is a solution. Maybe you need to get some you have some properties. Let's see how we can refinance those properties. And they were all in from the very beginning. You said you have money available. Oh, they wanted to know more about it. So we spent a good deal of time on the phone because we're able to solve that problem. You taught me how I can do that for clients, and you're showing us how it's all done. Jonathan, it works just like you said.
Yep. So, guys, to give you guys some background, Don has a client, and they will put in the incorrect loan product because once again, it doesn't take expert. People don't. I mean, people know what they're doing, and you're not licensed, and you got to be careful you deal with whatever. And people do things for the wrong reason. These people, they had two free and clear properties, which they could have done a cash out refinance and walked away with the cash in their pocket. Instead, the broker put them into a rehab product that requires them to take draws. And it was on the scale of A to Z in terms of stupidity, that was a Z. All right. And so it encumbered those properties with liens, and they really don't have the funds to complete the projects. So now they came to Don. Don was like, okay, great. So Don's working on them. Don reached out to me like, hey, where do we go with this? Like, and as we were speaking, because Don, like I said, students come to me, I continue to help. And because it looked crazy to Don. Don couldn't believe that this happened as well. And so it's like, look, we can't get anything else out of those properties because those properties right now, believe it or not, are all encumbered and, with a lien. They have a portfolio. We need to go look elsewhere in that portfolio, get them the money that they need in order to complete the projects. Once they complete the projects, they can then refinance. Okay. And they can then refinance those properties. So that's what it is, because they have to refinance them because they were put in a bridge loan. That's a loan that has a balloon payment that's due at the end of 12, 18, 24 months. So with that being said, Don, has been working with these people. I've been there watching, and I'm like, okay, let's solve this problem. And so now they're using the language, right, Don? They're like, well, the problem that we're trying to solve here.
Exactly.
So guys, professionalism and respect. Okay. And, that's what it is. You're always going to be professional. Guys, you're selling money. These people, they're getting $700,000 from Don, approximately. Okay. Don's selling this money. It's not his, it's the bank's. And so people respect you as long as and you should remain professional. I mean, if you're able to lend people millions of dollars, they're going to respect you. So this business comes with a great deal of respect. Energy. You got to bring the right energy. People feel your energy. That's important. Values, ethics, and integrity. Guys, and I think the people that did these loans didn't have great values, integrity, or ethics. And so Don and I are restoring these people faith in the industry because we're showing great value, ethics, and integrity. So I want to make sure you guys do that. All right. So number one, this is no capital is required, folks. You don't need money to get started. That's the best part about this business. You're selling money and you don't need money to sell money. You're using, OPM, as you guys like to call it, other people's money. You don't need $1. Someone can come to me and say, Jonathan, I need $17 million. And I can sit back and say, okay, let's do it. I'll get you the $17 million and look like a hero doing it, folks. But think about this, when I say look like a hero, this is not my money. This is the bank's money. That's why I call it TBM. You guys call it OPM. I call it TBM, the bank's money. So you don't need no capital to get started because the capital that you're using is coming directly from the bank. Okay. Number two, no license or certification required. None. This is a B2B business. All right. And so if you were to do a loan with a consumer, someone that's going to consume the product, consumers get all the protections. And guys, I'm going to tell you something. Consumers need them because, just like that, those people that were working with Don came upon an unethical broker that put them in a bad loan product. That's why consumers need the protections. But these people, they're businesses. They should have done their due diligence. That's what the everyone say, and learn more about the loan products out there before they accept the loan product.
Folks, that's right, Jonathan, because I've been in business 19 years. People have known me to be only in this business year after year after year. We have an A+ business. We have an A+ rating with Better Business Bureau with absolutely no complaints. So when people come to us, they look to get good information. Not everybody has that information. And so not only do we provide a good service for what we do, we also provide information on other businesses as well, because we have connections, we have relationships with businesses that do good business. They're high quality, they have integrity, and we only do businesses with business that have integrity, so they listen to our recommendations.
No, absolutely. And so as a and so like when you and I were dealing with these people, it was crazy time because you guys, this is non-regulated. Okay, it's a non-regulated industry. If you guys look up there, that's what the heading says: non-regulated industry, and it says very low barrier of entry. And that's why, guys, I'm gonna tell you something. If they taught this in high school, man, oh man, what I mean? People will be walking around here, millionaires, multimillionaires by now. This creates generational wealth because if you learn this in high school and you're preaching this and teaching this from then, oh my gosh, it's life changing. But because you don't, like I said, you don't need money to begin. You guys can actually open up this business. As soon as Don shuts this room down, you guys can actually open up your own business. So, all right. So as I said, no capital is required. No license or certification is required. Your credit history is not an obstacle. If you have great credit, great. If you have horrible credit, great. Okay. Because they're not lending you the money. The money is going to be lent to your client. And believe it or not, your client doesn't have to have great credit either. Yeah. They just have to have a great loan, and the loan have to make sense. Perfect background is not required. If you made a mistake, you have a DUI or whatever, or that's not going to hold you back from getting in this business. All right. And no experience required. I hate that, but it's true. Now, some of the lenders won't deal with you if you don't have the experience. And that's why, our course is actually, believe it or not, we went out there and we made sure we took the steps to ensure that our course is recognized by these lenders. I mean, when you see it, they allow you. It's an accredited course, and it allows you to get count as 2 years of experience in the business, which some lenders require you to have. So that's what we do. All right. So no experience. Now, number 6, the other barrier is I'll put 6 is location. You can do this from anywhere in the world. You can do this from anywhere in the world. I can be in New Jersey and do a loan, in Texas. I can be in California and do a loan in Maine. I can do it. I can be in Arizona and do a loan in South Carolina. I can be in Florida and do a loan in Illinois. Guys, I could be in Dubai and do a loan, in Pennsylvania. I could be in Nairobi, Kenya, and I can do a loan, in Virginia. Guys, you can do this from anywhere in the world. So if you guys fall in love, if you guys are doing this and you fall in love with someone that lives in Montana and want to pack up your stuff and move to Montana, as long as you have your iPad, your I guess your internet, your phone, and computer/tablet, you're in business. So I want to keep this moving. 3 things you need in order to begin, guys. It's just 3 simple things. You need a business entity. What's that? That's like an LLC, S corp, corporation, C corp, whatever it is. It's up to you. I'm not going to tell you what you need. Now, a lot of there's some banks that allow you to do this without having that. Are you required to have it? No, but I'm going to recommend that you do have it, because if you don't have it, first of all, you're making a lot of money doing this. You're going to need to be able to write some things off. You're going to write a heck of a lot more off with an entity than you can as a sole proprietor. And so that's the first reason you want it. And the second reason is, I think 85% of the lenders require you to have it, not all. So if you want to work with all the lenders, I would recommend that you have that business entity. The second thing is a business checking account. Why is that important? That's important because you want to get paid. Remember, I told you can do business everywhere. You're a national company. not just local, you're a national company, and you don't want to attend every settlement. You can provide wiring instructions, and it can just wire the money to your account. All right. And last, you need access to lenders. I'm going to give you guys 2 lenders before we leave here today. You guys can reach out to them, but that'll get you started. But that's it. You got to have the Rolodex of lenders.
So, Jonathan, you mentioned that we need to have an entity, an LLC. So, anybody who is listening right now that currently has an LLC, once you give them these 2 lenders, they can start right away.
Absolutely. John, you really don't need an entity. I recommend that you have one. Can they do it? Yeah, you can do it without an entity. I just say don't. I mean, if you're going to protect yourself and your family, you probably should have an entity, but it's not even required. I put it down there as a requirement because I'm like, hey, let's make this happen because I want to protect you. I want to make sure that you get the best. I guess when it comes tax time, tax rate, write-offs and everything as possible.
Plus, you probably need a business bank account to accept your commission check.
Yeah, exactly. I had a young lady that took the course, and she went out there and she got a loan. Her loan was like $48,000 in commission or something like that. She didn't have a business checking account, so they snail mail her check to her, and she needed this money because they had a fire in the attic, and they were living with the neighbors, and they had a fire in the attic, and so it was $48,000. So she had to wait for that to come. It took about a week and a half for that check to get to her. And then when it got there, she didn't have an account. So she had to open up an account and deposit that check. And it took about 3 or 4 days for that check to clear. All right. So had she had a business checking account already set up, she could have given her wire instructions, and she could have been spending that money the same day it was dropped, and 2 weeks sooner, to get that the attic repaired.
Here's a quick question, Jonathan. Can a nonprofit provide loans? Can a nonprofit business do this?
Anyone can do this. Once again, anyone can do this. Remember, because you got to realize these are lenders. They don't have a retail branch or retail arm. A lot of them. That means that they're not going out soliciting clients by themselves. What they're doing is they're counting on people like us to provide the loan. The clients in the loans. Guys, I'm gonna tell you what's great about this business. What's great about this business is someone can come and say, Jonathan, I need $800,000. Okay, great. I get them. I'll set them up with a lender, take the application, and that person defaults a month later or 2 months later. Off that $8,000, let's say I made 4 points off that $8,000. That is that's 32. That's $32,000. It's $32,000.
$800,000.
Yeah, off that $800,000 loan. Okay, that's $32,000. That 32,000. You're like, wow, they defaulted. That's not. I don't care. They can default, and because I didn't do I found a client, I took the application, I did the loan, I'm the broker, but I didn't do the due diligence. I didn't do the underwriting. The bank did the underwriting. So the bank underwrote the loan, they did their due diligence, they did their fraud guards, they did everything and said it was a good product. I didn't approve that loan. The bank approved that loan. So the same way, I like to always tell people, like the same way a real estate agent is able to sell a house that doesn't belong to them and make up the 6% is the same way you're able to sell money and it make up the 6%. And the best part about that, folks, is this. The best part about it, that is, like if a house goes into foreclosure, they don't go look for the real estate agents saying, we're going to need that commission back. The same way they don't come looking for you saying, hey, we're going to need that money back. Should your loan go? It doesn't work out. Want to make sure.
Sounds good.
All right. So guys, so anyway, this is basically just Forbes and everyone talking about hiring business loan brokers. Why commercial lending? I'll tell you what, being a business loan broker provides an incredible amount of benefits. You join one of the most highly respected careers in the industry. Finance industries is highly respected. And like I said, when you can loan people money, they respect the hell out of you. Okay. And no matter what you've been in your life, hell, if you're a cashier, if you're a daytime as a cashier at Walmart, but you're helping someone with this right here, they don't know that and they don't care. But they're gonna speak to you as if you own a multi-million-dollar business, because guess what? You're helping them get money. And most likely sometimes if you're doing the lending side, guys, and I apologize because I've been overemphasizing the lending side for real estate, but the business purpose side is just as valuable, and you can make just as much money doing the lines of credit, doing the credit card stacking, doing the equipment financing and all that other stuff. Guys, any loan that a person need to run their business, start their business, continue their business, save their business, you are able to do. Okay. So I just want to emphasize that as well. So you guys can loan money. You guys don't just own a mortgage company, you own a finance company. So I just want you guys to understand that. Your income trajectory, number 2, your income trajectory is faster and higher than traditional finance roles. It's very lucrative. And that's true. Like on this deal that Don's doing, $700,000 approximately. Don makes 4 points on that's $28,000. And that deal will be done before the holidays. There you go. You go figure. You become a partner and a trusted advisor to business owners who needs your expertise. Time to earning is fast, which is you can start earning right away. You guys can start doing it today. The initial time investment required is very low. Competition is very low as well, guys. There's only about 11,000 people doing this in this country, and it's over 30 million businesses, folks. 11,000. Think about that. That's because this is the best kept secret out there. Most of you guys never heard of it until today. And it's the last one. You make a lot of money and have fun while doing it. Absolutely, guys. I haven't had to take off a vacation in years because I don't have to. If someone calls me right now and say, hey, jump on a flight and meet me in Miami, I'm able to do so without getting the okay from anyone, because I'm taking my business with me. As long as I got my tablet, my phone, and some internet, I can take my business wherever I want to go. So, all right. Top 7 reasons to become a loan broker. Here it is. You can earn plenty of money. Being a business lending and commercial loan broker can be extraordinarily lucrative. You can earn, money on almost every deal you close the fund. This is typically range from tens of thousands per deal to hundreds of thousands, guys. I've seen. I'm going to see if I can put up there a check, a commission that Jonathan Drummond, the guy I told you, it was $100,000 commission. Matter of fact, Don, I'm going to give it. I'm going to text it to you because I'm quite certain you're better at this, and you can put it up there and show them this $100,000 commission that he got on one deal, folks. So it only takes a couple of deals to prove yourself. Guys, once again, they can evolve into a 6-7 figure business for you. Number 6, low competition. There's not a lot of business lending and commercial loan brokers. There's about 11,000, like I told you. In comparison, there's about 1.5 million realtors and about 3 million real estate agents out there, folks. Of those 11,000 loan brokers, they're serving over 30 million businesses in the United States. There's about 600,000 new businesses formed every month in this country, folks. Guess what? Each one of those businesses should have a business plan. And what does that business plan usually call for? Capital. So, but the sad part about that, and the flip side is that there's about 500,000 businesses closing every month. All right. And why are they closing? Because they don't have access to what? Capital. That's your product. Your product make the world go around, believe it or not. So that's an incredibly large market to be served by so few brokers, guys. Number 5 is easy to get started. Startup costs are exceptionally low. Think about it. You don't need money to sell money. That's ironic. If I open up a sock shop, I need to have socks, inventory. Hey, you don't need money to sell money. And there's money has such a high markup, man. Don always talks to you guys about, the P.I.L.L. method and why the P.I.L.L. method is so invaluable. Because I'm going to tell you, the most expensive thing you can buy is money.
That's right.
So, and people don't understand that the money is the most expensive product you can buy. People always say, "Oh, we're borrowing." You're not borrowing anything. You're buying it. I borrowed my brother's jacket, and giving it back to him. I had it cleaned and given it back to him. I borrowed a car. I returned it with fuel. Okay, you borrow $400,000. By the time you're finished paying it off for 30 years for a house, you paid over $1 million. So, you're not borrowing anything. So, yeah, the startup costs are exceptionally low. You don't have to go through any expensive training. In most states, you'll need special licenses or bonding. Guys, all you need is understanding of the business and the products offered. Finding leads and selling money are easy. Business owners need money to grow. You're the answer to their lending capital needs. When you help a business out, they come back to you for the other lending requirements and refer you to their friends and colleagues. Guys, you can start off helping someone get a line of credit. Then you can start off helping them get some new equipment. Then you can start off by helping them get a building for their business. And then, you can help them get some working capital because they need it. Then all of a sudden, after you get them all indebted like that, you can get them, you can go and refinance all that stuff again because they need some relief. And once again, you from beginning to end, you can help these clients. As a result of this massive need and demand for funding, it's easy to generate leads. It really is, folks. All you have to do is let people know you have it. Go to your Facebook. Jonathan Drummond, no advertisement at all. He's doing over $3 million. His first year, a little less than $800,000. Lofty, yeah, I don't like to speak about Lofty too much because he has a real estate business. But Tanya Turner, 1.4, 1.5 million her first year, all off of just on social media, letting everyone know and doing the homework that we give during the course. So
when you said social media, she put that out on like she's a commercial loan broker. She put it out on Facebook or something like that.
That's what most of them done. They go to Facebook and Instagram and let everybody know that they have money. And I showed them how to do it. There's a certain way you do it because a lot of people don't know you as a lender. So they're going to be a little skeptical. So we show you how to get around that. They're like, man, you just asked me to borrow $400 last week. And now you talking about you can lend me, $4 million. Come on, so we show you how to do it. We definitely won't. Number 3, guys, is a highly respected career. That's why I love this. Business loan broker is a highly respected career, like many others in the financial service industry. You control the money and capital that helps people build and grow their businesses. When you can put hundreds of thousands, even millions of dollars into the hands of business owners, you'll be rewarded with a tremendous amount of respect and appreciation. You'll become close friends with your lenders and make a lot of friends along the way as lenders and clients, guys. And you'll find yourself building a long-lasting relationship with over years. Guys, I always say this right here. If you sell Toyota cars, okay, you're most likely going to drive a Toyota. If you sell a Ford, if you work at a Ford dealership, you're most likely going to drive a Ford. Same thing with Mercedes. If you sell Mercedes, you're most likely. If you're around money, selling money, you're most likely you're going to have money. Because if you can get money for others, you certainly can get it for yourself. Just want to put that out there. Number 2, you have personal freedom. Like I said, I come and go as I please. One of the things that we value the most is the freedom that career gives us. We don't have to worry about getting into an office unless we want to. So it's just you work how you want. And number 1 is a recession-proof business. All right, funding is recession-proof. When the economy changes, business owners start looking for capital to ride the wave. This means no matter how good or bad the economy is, your service will always be in high demand. So when the economy's good, people are like, hey, let's go get more money so we can make more money, and, they want to grow their business. And when the economy bad, what they need working capital to make payroll, to do everything else they need to do. Guys, you're always in demand. So that's what it is. I just wanted to say that those are the quick 7 reasons why you should get in. Now, here it is, folks. Funding your real estate business. This is just more than real estate. This is more than real estate. You could do revenue lending, okay? Loans based on revenue. You can look at someone's bank statements and say, okay, based on that, we can do that. Merchant cash, MCAs, merchant cash advances. You can do that again. That's sort of like revenue lending as well. Accounts receivable financing. A lot of people don't get paid. Businesses don't get paid at the point of sale or the point of service. They get paid, believe it or not, they get paid, invoices, maybe 60, 90, 180 days. And guess what, folks? What that means? That means that you're able to go in and do what's called factoring. What is factoring? Factoring allows you to actually take someone's invoice and give them money based on those invoices. They can a percentage of those invoices. I want to put that out there. Startup unsecured business. You guys can fund startups. If they've been in business for 90 days, you guys can provide funding for them. 401k financing. Someone has a 401k, you can loan them money using that 401k as collateral. Securities financing. You're able to, if someone has a stock portfolio, you can use that as securities, and you can find and use their stocks and their investments as collateral, and you can actually lend money based on that. Commercial vehicle. If someone like trucks, those trucks are like a couple of 100,000 or more. You guys can lend money on commercial vehicles. Commercial real estate. Everything about commercial real estate, you guys can lend money on, folks. And I mean that. And I'll tell you this right here. When it comes to commercial real estate financing, it is just unlimited what you can lend on. You can lend on in terms of loan types. Let's say you're able to do all kinds of loans. You can do it's just endless. You got malls, power guys. It's one second. You can just do so much. Give me one in terms of loans, guys. You're able to get loans for any kind of business out there. And I want to give you guys a list of some of those businesses that you guys can do loans for. Give me a moment here, because believe it or not, all right, here we go. All right, so you're able to do loans on agricultural building properties, cannabis related, churches, and religious buildings, entertainment, recreational buildings, gas stations, hospitality, as a hotels, industrial, that's like factories, land, lots, vacant land, empty lots, medical healthcare, hospitals. You guys can do dentist offices, whatever, mixed use, mobile manufactured home parks, non-owner occupied, 1 to 4 unit, non-owner occupied, guys. Office buildings. You guys can do rental portfolios. You guys can do subdivisions, residential subdivisions. You guys can do retail, restaurants. You guys can do special purposes. All that you're able to do under commercial real estate financing. It's nothing you can't lend money on. That's the beauty of this. Equity investments, where the lenders take an investment in the equity. If the lender, if you need that kind of loan. Inventory. If a retail place needs inventory, new or used, you can do inventory. Equipment financing. Like I said, any kind of equipment, heavy equipment. Some of that heavy equipment is millions of dollars. You guys can loan that. SBA loans you can do. Term loans, you're able to do term loans. Business lines of credit, you're able to do that. The larger line, the more you make. Micro loans, those are any loans under $50,000. Franchise financing, if someone's opened up a franchise, you can help them. And working capital loans. Whew, done. Shit, guys. So yeah, I just want to get a whole, because I'm trying to rush through this. Basically, don't worry about that. But that's it, guys. And we do offer a course. If you guys are interested, guys, believe it or not, the course that we offer, it's a $25,000 course, but we on Clubhouse and Chatter and Twitter and everywhere else, we've been doing it for approximately $10,000. And what we do right now is we do, because it's Black Friday, we are doing it for $7,000, $7,500. If anyone wants to get in, we show you guys how to do it. We get you guys set up. We give you let you understand the opportunity, understand the loan and your role in the loan process, setting up your business and structure. We show you how we got people that can do the websites. We got all kinds of stuff. We make it very inexpensive for you. Set up your lead funnel, utilize and grow your existing networks. Build a lender network. We give you a list of over 100 lenders. We also give you a broker toolkit. That broker toolkit will allow you to actually go out there and set your business up right away. Build your own unique selling proposition. Start marketing organically. Okay, that's like organically, not without paid marketing. Then you can scale to paid marketing. Close deals, earn commissions while learning the business. We're going to walk you through and build a team, help you build a team. Oh, Guys, this is a very scalable business. And in closing, I'll say this: this is a scalable business. You can teach this to others and give them 1%. So if someone and the best part about it is they're going out find their own business. You don't have to. They're all 1099. You don't have to pay their taxes, matching taxes, and you don't have to worry about cover medical. They're all 1099, and you don't have to give them a salary. They eat what they kill. So if they go out there, if they don't close a loan, they don't get paid. So it's very scalable, and you make a lot of money off of teaching people how to do this. So that's it, Don. I want to make sure that everyone understand that we give you 4 days of training. It's over 100 vetted lenders. We have training every week, guys. We have people coming in every week. We have exclusive support groups. We have accountability partnerships that's going on. You own your business. It's not a franchise. We don't make any money off of what you do at all. So, minimal startup, we teach you everything you need to know about the business, how you can earn money as a broker. That's basically training people how to do this. You make money off of your commissions, you doing it yourself, and residual. There's a lot of residual money that's being made off of this. So with that, Don, I want to say three things. Make sure you need the three things you need to get started is a business entity, a checking account, and access to lenders. That's what it is. So there it is, folks. That's who I am. I have anyone has any questions, I'll be more than happy to answer any questions for you guys. Okay. Once again, that's the original calls. Okay, guys. But what we did, we took it down to that. But for Black Friday, we're taking 25% off. And that's it, folks. I want to make sure that if you guys have any questions, I'll be more than happy to answer any questions that you guys
So Jonathan, go ahead, and you talked about giving us 2 lenders that we could get started right away. Go ahead and give us those 2 lenders.
Yes. 1 second here. Let me give you those 2 lenders.
Okay.
Stop sharing. All right. So I'm going to give you their phone numbers right now, guys. All right. So you guys can call them. All right. Once again, thank you for reminding me, Don. The first lender I'm going to give you is, I'm going to give you someone different, guys. I'm going to give you.
Sorry about
Jack
that.
Robinson. Okay. Jack Robinson is with Civic Financial. All right. Get ready to write these phone numbers now, guys. Jack Robinson. All right. Give me one moment. So Jack's phone number is area code 310-947-41.
Okay, one more time, Jonathan. Sorry.
31. Okay. What happened there? All right. Give me one moment. I don't know what just happened there. Give me one. All right. So Jack Robinson, Civic. No, he's not with Civic. He's with CVC Financing. His phone number is 31, area code 310-947-4017. That's 310-947-4017.
What's his designation at the company?
He's an AE, an account executive. All right. And I'm also going to give you Marie. Now Jack is going to handle the real estate side. And on the business side, Marie Lokmanyan, okay. Her phone number, her area is also 310-402-1600. That's their cell phone number. Now, believe it or not, folks, these people, if you contact these people, they're going to be happy to hear from you, because once again, you're able to provide them with an opportunity to earn money, to get, to sell capital. So, like I said, there's nothing like selling capital, folks. So it is a huge, huge, huge opportunity. So, hey guys, I'm gonna tell you, if you're an investor, learn this, because don't go borrow money from myself, calling anyone, your broker. Your broker's making 3, 4, 5, 6 points off of you. So if you're buying a $400,000 property and your broker making 4 points off you, or 5 points off you, so call it 5 points, that's $20,000 that your broker making off you. Guess what, folks? You're able to do this deal yourself okay, and not charge that. And you're able to do your friends and your colleagues loans as well. Guys, pretty soon, like I said, you start making so much money off of selling money, it becomes your main business. And you're always the life of the party. You're always respected. Everyone respects you because you are, the capital. You're the money. You're the bank. You literally are the bank, and then you own a bank. So just wanted to put that out there, folks. We walk you guys through it. Like I said, Tanya Turner, her first year, she made 1.4 million. Lofty made 660,000. We had Chad Leonard. Chad Leonard made like 418,000 his first year. Jonathan Drummond, a little less than 800,000 his first year. Jonathan Drummond did like 1.8 his second year, and he's doing 3 million plus. You guys can follow these people on Instagram. They're there. You see them doing it. So, and guess what, folks? All of them were people just like you that did not know this existed. And when they found out that this existed, they were like, wow. So, like I said, Don is doing a loan right now that he's going to make an easy $28,000 on. An easy $28,000 just because someone had a problem that he's going to solve. Any questions from anyone?
Right.
Pam, anyone?
Tyrone, Pamela, you got any questions?
Yeah. I just had 2 questions. What was Marie's last name?
Marie is look Mignon. That's L as in Larry, O as in Oscar, K as in King, M as in Mary, A as in Apple, N as in Nancy, Y as in yellow, A as in Apple, N as in Nancy.
Okay. And you said she's on the business side, or because what?
Business loans,
Jack is real estate, and
the real estate. I gave you Jack, guys. We have a list of, and Jack doesn't do it all, but we have a list of over 100 lenders and what they do. That's one of the things that we do. Absolutely. So path to loan sourcing, guys. All you have to do is really go here, go on to your Facebook or your Instagram and say, like, hey, are you or anyone you know looking for funding for your business? Please reach out to me. I'm working with a lender that are providing loans to new and existing businesses with very low qualification requirements, and that starts something like that. Don't say I'm loaning loans, because they're like, yo, you just tried to borrow $70 from me last week. So you know what I'm saying? So they rather, when you say I'm working with a lender that provides loans with very I guess that unrestricted qualifications, something like that. Whatever you word it the way you want to word it.
Hey, Tyrone, you got anything else?
Yeah, the only other question is, what is your website to cinch, or if we want to?
It's cinchbiz.com.
It's what?
Cinchbiz. Cinchbiz academy.com. BIZ. CINCHBIZ academy.com.
Okay, cool.
Yeah.
All right.
You have some content. You have content up on YouTube if we just want to kind of educate ourselves a little bit more, or you stay off of YouTube.
I stay off. Yeah.
Well, this is on YouTube now.
Yeah.
Yeah.
Exactly. Wait, let's just right here, folks. So we do have a Black Friday special. If you guys want, you guys can reach out to me. I'll give you my number. If you guys want my number is area code 609-558-8425. And that is for the Black Friday special that we got going on that allows you to get a quarter off. Guys, we have because this is we're accredited. So since we're accredited, guess what? We offer lending for the course. So if you don't have the money for the course, well, guess what? You're able to get a loan for it. And then we also have payment plans for people that don't qualify for loans. So anyone that wants to really truly get in and learn, we make sure you're able to get in and learn. And we have a course coming up next week, I believe. So if you guys want to get involved, let me know. Thank you.
And we're live now.
Yes. And we're live now.
I'm
It's
gonna be
also
honest with you, Jonathan. I see these things on YouTube. You know, people talking about this. Um, but you don't get to actually spend time with the people. You seem very chill, very relaxed, like you're having a great time. You don't get to see that from these people, and you don't really get to see the service that you are providing in terms of making a difference in people's lives. Um, I think I'm gonna give you a call because
I'm glad you said that. I remember Chad Leonard. His first year he did like 400 and something, 18,000, something like that. But I recall when he first took the course, and I was walking around. I was at a flea market, you know, like an indoor, like whatever. Not it's like you guys call them out in the West. They call them whatever you guys call them. I forget. But anyway, I was there, just walking, and I was speaking with him on the phone. And I said, Chad, you know, you've been telling me you have all these clients, you know, but you haven't, like, what's going on? You know, you haven't closed any loans yet. And he goes, yeah, I have. I said, what are you talking about? He said, I think by that time he closed like four or something like that. I said, really? He's like, yeah, I paid my mom's car off. And he's like, yeah, and he starts telling me, like, you know, his mother called him, and he starts crying. It had me a little choked up because his mother called him because he didn't tell his mother because he handles the bills for her. So his mother called him and said, son, what have you done? What have you done? And he's like, what, mom, what? She goes, I called the bank and they said that I don't have an auto loan anymore. What have you done, son? He goes, oh yeah, mom, I paid your car off. Because he did so well. I think he made like $70-some thousand really quickly, and the car loan was like $20-some thousand. So he paid it off for her, and so she was crying, and he was crying, and he was almost tearing up when he was telling me this. So it changed his lives. Tanya, what I didn't tell you about Tanya is this right here. Tanya, believe it or not, she was facing foreclosure. She couldn't even afford the course. All right. Oh, you know this, right, Don? Don
yes,
knows
I
this.
do. Yes, I do.
Yeah, so she was facing foreclosure. She couldn't even afford the course. And she came in and she was speaking about it, and she was crying, like, oh my God, I think this will help me so much. And someone saw it, and someone said, you know what, I'm going to pay to get her into this course. So someone paid to get her into this course. And once she got into the course, she killed it. And you know, her first year she made like $1.4 million or something like that. So and that was off of someone's generosity. So it changes lives. It creates generational wealth. And the best part about this is once you learn it and you understand it, you can teach it to your friends and family members. They can work with you for a while, but everyone learns it, man, and it just changes your life. I mean, I have a beautiful home, you know, and I have that because I've done a lot of things to make sure that I stay close to capital. I'm always around money, and I'll leave you guys with this: when you're always around money, you're always around what? Deals. People are always in deals. So now here's the best part about that: deals fall apart, and sometimes for the wrong reasons. Right? And so people open up their garage door and a finch flies in, like, oh my God, a finch just flew in our garage. Last time a bird flew in the garage, Aunt Mary had a stroke. Oh my God, that's a bad sign. I'm not going to do the deal. They call you up like, I'm not going to do the deal. Why not? Because a finch flew in a bird flew in my garage, and last time my aunt, had a stroke. So that's a sign. That's a sign. Like, what are you talking about? We're ready. It's a great deal. It's ready to go. This is a great deal. I can't do it. I can't do it. Guess who? Guess who knows about that deal, the ins and outs? You did. Guess who got her the money? You did. Guess who can get the money for themselves and get that deal done? You can. Okay.
So remember, folks, correlation is not.
I got what you just said.
Correlation is not causation.
You've done all the work, right?
Hey, listen, folks. This is good stuff. This is good stuff. You see, here's the great thing about our show. We're going to tell you things about money that most people do not know about. In fact, there are going to be people who will argue you down that says you can't lend money without a license. Not true. There are going to be people who are going to try to tell you you don't have. There's no way you have access to 100 lenders that you can help me with. Listen, when business is bad, when the economy is down, Jonathan does way more loans than I do. Okay. Even at that, I have AEs, account executives, reaching out to me, emailing me, and calling me. Why? Because they have money they need to lend. They have money they need to get out get out to people, and it's against the law for them to advertise. They can't advertise, but they can call me because I have access to people who need money, even me. And Jonathan does way more loans than me, but they're still calling me. Why? Because I'm on their list as a broker. Because I took the course.
Mm.
Who knew?
Yeah. How long ago did you take the course, Don?
What was it, a couple of years ago, Jonathan?
No,
3 years?
Two, like a year and a half, actually.
Yeah, a year and a half. Yeah.
Your wife just took it 7 months ago. His wife,
Yep.
she came and took the course.
My wife took the course. So listen, this thing is awesome. So folks, not only are we talking about how to get the money, all right, we talk about how to pay the money back at a lower interest cost. I mean, it is mind-blowing how you can get it. It's mind-blowing how you can sell it. It's also mind-blowing how you don't have to pay the interest. It is so mind-blowing that even Jonathan didn't believe it at first. Okay, but now he does. Let me show you something about how you can borrow money and how people don't pay attention to what it costs to manage the money, because somebody is making a lot of money on these loans. So let me put this on the screen for everybody. Do you see this right here? This is a person who has 2 commercial buildings. They are office buildings, okay? And he has loans right now of $2,236,376. This, what you see right here, is a savings and earnings report. Anybody can get a free savings and earnings report so that you can know the month, day, and year you could be debt free and how much interest you could save. And if you're in commercial real estate, you can also learn when it's going to be the best time to cash out refi at a much lower interest cost. If you're in commercial real estate, your goal probably isn't to pay the loan off. Your goal is to say, literally, how fast can I get equity so I can use that money again? Let me show you something here. $2.2 million. Okay. Taking into account his vacancy rate. All right. He's making approximately $57,800 a month income. Okay. His debt payments, loan payments, are $14,696. All right. He told me personally, see, Don, out of my cash flow, $36,000, approximately 63% of the money that I bring in, I put right back out into building my portfolio. Okay. So the first thing people tell me when I'm telling them that they can save money like this is, Don, why would I take my money that I can make 20% cash on cash return? Why would I ever do anything with these loans when I have tenants paying for my properties? I got tenants paying for my properties, and then you want me to pay the loans off early? Why would I ever do that when I can take that money and invest it and make 20% on it? Jonathan, you've heard that before, haven't you?
Absolutely.
Okay. So I'm saying, you know what? If you have designated a certain amount of money to invest, I don't want to touch that. Continue to invest. All right. Continue to invest. So, but he also let me know that about 11% of what he brings in, he puts into a reserve account so he could take care of repairs and maintenance. That money is sitting in the bank, just sitting there. This guy makes so much money, it's not even funny. He's got about $100,000 sitting in a reserve account, making about 0.1%. Why doesn't he care? Because he's cash flowing like $43,000 a month. Why would he care? Okay. He didn't care before, but he read my book. And when he read the book, a light bulb came on, because then we could show him, he began to understand that the banks wanted him to pay in interest $1,123,195 on his loans. Why didn't he care? Because he's cash flowing over $40,000 a month. He didn't care about that until he read the book. He found out that he could pay out in interest about $231,000 instead on his current loans with his current budget. What? Don't have to refinance to do this. The interest rates that I have now don't change. The banks don't change. The financing doesn't change. Nothing changes except how much interest he's going to pay on that money. That's the only thing that changes. So if you know, instead of paying $1,123,000 in interest, you can get that down to $231,000. That's called your effective interest rate. In fact, so if you can figure out, I'm going to pay $231,000, here's the question. What would my interest rate have to be from the banks to pay this little amount of money in interest on these loans? I'm going to blow this up for you so that you can see this really, really well. Your interest rate would have to be 0.67%.
Wow.
0.67% on. That's why I don't care about interest rates. I really don't. If it cash flows, I don't care what the interest rate is. And I'm going to tell you all, if your property is cash flowing, don't you ever refinance just to get a lower interest rate. You don't need to. In fact, you're better off at the higher interest rate than you are at the lower interest rate when you understand how an amortization schedule actually works. And we're going to teach you that. Plus, we're going to provide for you, watch this, the technology that does all of the math. You think there's a lot of math that you have to do here. You don't have to do it. You follow the prompts, like we call it our financial GPS. Okay. It tells you exactly how much money to move, what month to move it in, what day of the month to do it on, and which loan to attack. And we're going to tell you how much interest you save at each juncture. 0.67%. So if I can borrow money at 0.67%, should I ever pay cash for a house or a car? I'm just saying, or a commercial building.
Not at that rate, Don. Not. I mean, if you can get money that cheap, no, not at that rate.
Yeah.
Hey, Don, real quick. Also, guys, because someone just found me, my phone number is 609. I meant to give that 558-8425. If you guys want to reach out to me, once again, I'd say
one more time. Put it in the chat as well.
609 558, and I put it up under my name as well. Because someone just emailed me and I got to receive the email.
I'm putting it in 609
558 8425.
8425.
Yeah, there you go. If you guys want to reach out to me, there I am. You can text me, reach out to me, and that is for the Black Friday special. Yeah, absolutely. You want to make sure that's there.
There we go. I just put it in. So now here's what we're going to save him, Jonathan.
Yes.
He was willing, Tyrone and Pamela, he was willing to pay the bank an extra $891,000 he didn't have to pay. He was willing to do that because he thought giving the bank this money was the cost of doing business. That's what he's been taught his entire life. I borrow the money, I pay the interest, but because I borrow the money, I'm going to make money because I borrow the money. We are now showing him where he can increase his profits by lowering his expenses in a place he didn't even think to lower expenses. He can now cut his expenses by $891,000. That's nearly $1 million, folks. So let me ask you this. If you can get property, okay, like this, but you can get it at $891,000 cheaper. You can get the same equity for a lot less interest cost. Why wouldn't you? Okay. Now, what can he do? What can he do with the money he's no longer giving the bank? We're going to show him how he can turn it into another $9 million. And this is at a 1% return on his money.
Wow.
It's right here. This is your savings with a 1% return. Imagine now he's getting a lot larger return than 1%. Okay. We're going to show him that how he can make at least that much over the next 17 years with the money he's not giving to the bank. And that's not just on this loan. It's on the next one and the next one and the next one. So this is what we do, ladies and gentlemen. We're going to show you, here is what I mean by this. And then I'm going to put one of his loans on the screen and tell you what we're doing with it. Here's how the bank wants him to pay this money back. Look at this. This is in the red. This is how the bank wants him to pay the money back. Here's what we're doing. If he wanted to pay these loans off, he could pay it off in about 4 years and not use any of the money he's designated to reinvest. Don, how in the world can I do this? Because you don't need more money to get out of debt, ladies and gentlemen. What you need is this. You need to pay less interest. That's it. Pay less interest and you can manage your debt better. Let me give you an idea of what he's doing here. I'm going to put something on the screen. We're going to show you one of his loans, and I'm going to show you how easy it is to do this. Hold on. Let me get the information. There it is. All right. I'm going to put one of his loans on the screen. I'm pulling this up now. Okay. Not that. All right.
Yeah, huh? Don, real quick, while you're doing that, the people that we were speaking to helping with that problem, they said they were interested in coming on the show today. Are they still coming?
Listen, they're thinking about I gave them information, but they are waiting for our phone call after the show.
Gotcha.
Yep, they're waiting for our phone call after the show. So let me pull this up.
One moment.
All right, and I'm going to put one of these loans on the screen. All right, and there it is. Okay, so he has one of the loans. The payment is $8,704 a month. It's 300 payments because it's a commercial loan. 300 payments. Interest rate is 5%. Okay. This is an SBA loan. And because of that, here is where the loan started. Okay. And we'll calculate that. And it's $1,488,000. Okay. That's his loan. And he didn't care about this because he's cash flowing so much money. All right. He didn't care about this before. So let's take a look at this loan, how it breaks down. Out of his $8,700, 2,500 of those dollars was principal. The interest is $6,203.78 on the very first payment. Here's what I need to let everybody know. We have been taught a certain way about principal and interest, as if the principal goes one place and the interest goes to another place. Let me tell you something. When you make this payment, all $8,000 goes to the same place. All $8,000 goes to the same place. What's really happening is that this loan is discounted. Your money that you're paying out is discounted by $6,200, so that only $2,500 counts to pay back the loan. That's what's happening. Now, if you don't believe that, here's what I need you to understand. You can sell your own property. You can sell your own car You can become the bank. You can say, you know what? I want to self-finance. You can set up an amortization schedule for yourself and say, listen, pay me the money instead monthly. And guess what? When you do that, if you did your loan just like this, the payment would be $8,704. So when a person makes the payment, how much money would you get? You would get all $8,704. But because of the amortization schedule, only 2,500 of those dollars would count to pay back the loan. So what's really happening here? Let me give you an example. Let's just say you had a swimming pool, and instead of a fire hose, I'm going to give you instead a 5-gallon bucket to fill up that swimming pool. But by the time you fill up your bucket and take it over to the swimming pool, 80% of the water has leaked out and only 20% of the water is going in the pool. How many more trips will you have to make? Because of that, because so much of that money is discounted up front, he has to make 300 trips to pay the loan off. That's what's happening. So let's learn how not to do that. So if we start this loan in January, all right, we start the loan in January. He makes that first payment, his principal payment for February, and I got Pam and I got Tyrone on here. You can help me to understand this for the folks. How much is the principal payment for February? Okay, unmute, please, and talk to us.
It's the 2500,
Okay.
2510.
All right. So if that's the case, he can make that payment in January. Does he have to wait till February to give the bank this $2,510?
No.
If he had it, could he give that to the bank in January as well?
Yes, he could.
All right. And if you did, guess what, ladies and gentlemen? None of this money, because he did it in January, none of it is discounted. All this money goes directly to principal, and he's paid down to line 2 on his amortization schedule in January. The bank uses this number to figure out how much interest he pays on his next payment, which takes him to line 3. So he got rid of 1 month on his amortization schedule, not for the $8,700, but only $2,500. He got rid of line 2. And guess what happens to the $6,193 that the bank was looking to receive from him? Guess what happens to that?
It disappears.
It disappears. They never have to pay it. Okay? Because if he paid on time, it cost to pay his loan down by $2,500. If he paid on time, it would cost him almost $6,200 of his money just to receive an additional $2,500 in equity. Does that make sense, everybody?
No.
So if I give them this money up front, do I get this equity for free?
Yes.
Exactly, because my money is not discounted at all, is it? This is why it's so important for us to understand how lending actually works. If you're listening to this and you're not seeing this, you need to go to the link at the top of the page here on Clubhouse, and you want to go to that link so you can see these numbers, because we are going to be teaching this in detail January 31st in Orlando, Florida, at the P.I.L.Ars of Prosperity Conference. P.I.L.Ars of Prosperity Conference, and right now you can get tickets at you can get early bird tickets for only $175. Text PILL to 256-215 9496 is crawling across the screen, and you can get more information just like you're getting today. All right. So we're going to be not be only teaching this, but we're going to be teaching the history of lending, how lending came to the US just like this, and how nobody else is teaching this. Not even the Wharton School of Business is teaching people how an amortization schedule works and how to beat it. We have technology and we have superior education, and we're going to dig down deep, helping you to understand why every real estate investor, every home buyer needs to understand how they can borrow money at a deep, deep discount, not just any old discount. We will guarantee that you will pay the least amount of interest that's mathematically possible without upsetting your budget. Watch this, ladies and gentlemen. So if we give this money to the bank early, pay them when we want instead of when he wants, instead of when the bank wants you to, you don't have to give them this interest. So what if we did this? Made our mortgage payment in January. We take a look at our amortization schedule, and we give them the principal payment on line 2, 3, and 4. If we did that on top of our regular payment, we eliminate the interest on line 2, 3, 4. Over $18,000 in interest they never have to pay, and they're still paying the loan back. So Don, if I'm a real estate investor, why would I take money away from investing to do this? Well, he's not. And let me show you why he's not. Remember when I told you before that this much money that he's bringing in each month is going towards investing. And he's putting money away in a reserve account that's just sitting there that he never thought that he could leverage that to help him to save some money. The reason why we don't understand it, folks, is that people know that they can prepay a loan. They can pay extra on a loan. But what we don't know is how valuable it is, meaning how much interest can we save by doing that? Okay? How much interest can you really save by giving the bank extra money? Because no one, not your bank, not your credit union, not your credit card, no one has ever sent you a receipt that says, thank you for the extra payment. Here is how much interest you just saved. In fact, if I gave your accountant an extra $500 right now, gave that to your accountant and said, accountant, I need you to tell me how much interest you would save by placing that $500 on your own mortgage today on principal. How much interest would you save? Your accountant wouldn't know how to even figure it because that was not taught in their classes to become a CPA even. Your mortgage professional who sold you your mortgage doesn't know because they don't need to know to sell mortgages. Your real estate agent doesn't need to know how a loan works to sell real estate. People who work in the bank who call themselves bankers, they are salespeople to sell mortgages. They don't understand how mortgages actually work. The only place you're going to get that, ladies and gentlemen, is right here. This is the only company in the world that teaches this. And if you don't believe me, look for it elsewhere on the internet. Okay? We've been out there for years. And why aren't people copying this? Because I own the copyright. If you go to the government website where copyrights exist, look up P.I.L.L. method. You see who owns the copyright. If you want to know who this is a registered trademark, who owns the trademark for the P.I.L.L. method, you'll see that I own the trademark. Okay, so we're building this up and sharing it. And if anybody else wants to do this on the internet, do you realize they have to come and ask permission to use this information? That's why you don't see it anywhere else. Not because it doesn't work. It's because I don't give permission. All right. So here's what we're doing. I want to show you something here. If he has $100,000 sitting in this account, and I just gave this to him as an example. Here is the example that I gave him. Okay. Here's the example. If we look at how much principal is paid down in 1 year, we add up all the principal payments. We go over to column 3 here and see that it's $30,000, $30,699.86. Okay. So if we add up all the principal payments, it comes to $30,699.86. If we add up all the interest payments for 1 year, look what it comes to, $73,000. Folks, that is $104,000. $104,000. Daniel wants to know, what are the dates for the conference? The dates for the conference are January 31st of next year, January 31st, in Orlando. That's the last Friday in January. Okay. And I got the information crawling across the screen. If you want more information, just text the word pill to 256-215-9496 and get all the information you would ever need about this conference coming up. Okay. So he didn't realize, it didn't occur to him, because he's making so much money per month, it didn't occur to him that his tenants are giving him $104,000 in just 1 year. And out of that money, only 30,000 of it is creating equity for him. He never thought about that before. So let me ask you this. We're moving that loan from point A, how much he owes now, to how much he owes 12 months from now. Okay. From point A to point B, how much interest does the bank want to charge him from point A to point B? Pamela, Tyrone, how much interest?
They're gonna charge him $74,000 basically.
$74,000. That's how much he gets charged. He didn't care. That's over a year, because he's cash flowing. He's cash flowing over 40, over $43,000 a month. So he didn't care about that. He never thought about looking at that, because he's cash flowing so much money per month. So when we showed him this and helped him to understand the concept of interest cancellation, I pointed this out to him. If we take a look at this, and you're going to be paying $30,000 towards principal, do you have to pay this money in 12 monthly installments? What do you think he said?
I hope he said no.
Yeah, that's exactly what he said. No. I said, you have $100,000 sitting in the bank over here making 1/10%. Could you borrow $30,000 from this bank account making 1/10%? Could you borrow from yourself? All right. Still have over $70,000 left in that account to do whatever you need to do. And could you apply that to principal up front? Now, our program will tell him exactly how much to borrow. I'm just using this as an example. Okay. And I said, could you do that? He says, yes, I could. If you gave this to the bank on line 1, would you be paid down to line 12 in just 1 month? He said, well, yeah. So if you're paid down to here in just 1 month, Pamela, Tyrone, what happened to all the interest payments between line 2 and line 12? What happened to those?
It disappeared.
Does it make more sense to you today, Pamela, than it did yesterday?
It does.
And the more you watch it, the more you're going to get it.
Yeah, absolutely.
Okay. So as we take a look at this, I just gave them the money that I would normally have to give them their way, and it would cost me $73,000 to give it to them. But this way, it only cost me $6,000. The interest I pay on line 1, it only cost me $6,000 in interest to get the same equity, not $73,000. So here's my question to every real estate investor out there. Can anybody justify giving the bank $73,000 to get the same equity? Can anybody justify giving the bank 73 grand of your money to pay the loan down to here when you can front them the money, pay down to here, and only pay $6,203.78 instead? This is what we teach. This is how we get the understanding. This is just prepayment of principal, understanding prepayment of principal. The P.I.L.L. method also goes over isolating the principal amount, leverage, and liquidity. That's P.I.L.L., P-I-L-L, prepayment of principal, isolating the principal amount, leverage, and liquidity. The last three letters are more powerful than what I'm showing you right now. When you understand all of it, you are now able to borrow money at the deepest discount available. And you're going to get coaching and teaching so that you can get rid of all the old information about borrowing money and replace it with all new information about borrowing money so that you can increase your profits because of all the interest you're no longer giving the bank. And if you can get the same equity, the same property at 75% off, then now that money that you didn't have to pay, you can now use that to grow your portfolio. How about that? Listen, Tyrone, Pamela, what do you have to say about this information?
It's amazing. It's amazing. And if this is just the small piece of it, and the best is yet to come, I'm ready to hear it.
Okay.
Yeah.
So listen. Yes, Tyrone?
I say ditto to that. There's over the last 6-7 years, we could have saved a lot of money.
Okay. So what we want to do, folks, if you want the same information, okay, if you want to know how you can get this for yourself,
and
I'm gonna mute you there, Tyrone. If you want to get this same information, here is what you need to do. You need to go to ice10k.com. I'm going to put it on the screen here. ice10k.com. Okay. I stands for interest cancellation expert. Interest cancellation expert. ice10k.com. And then the first picture you see is of E.T., the hip hop preacher. Why do you see that? It's because E.T. used the P.I.L.L. method to pay off his mortgage early and cheaper. Okay. He even says so. All right. So I need to get a quick drink. I haven't had a break in this entire time in 2 hours and 27 minutes. All right. I'm going to have ET take just a couple of seconds to tell you a little bit about this while I take a quick break right here. So I need you to take us and so ET, will you please tell the folks what's going on with this situation so I can get at least a drink of water here. Okay. So here's ET.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
All right, folks. E.T. told the whole audience that at my first conference I held in Nashville, Tennessee, Jonathan Bing was actually one of our speakers along with E.T.
It was a great conference too, Don.
So you heard him say that. Listen, folks, it was it was a great opportunity for all of us there. And we've played this video thousands and thousands of times listening to E.T. Now, why would E.T., who commands speaking fees upwards of $250,000 an hour when he when he speaks to corporations, why would he ever need to use the P.I.L.L. method to pay off a loan? He used it not to pay the loan off faster, but to pay the loan off cheaper. Think about this, ladies and gentlemen. If all of your loans were 0% interest, think about it. If all loans were 0% interest, is there any financial benefit to paying the loan off early? What do you guys think?
No.
No. So if there's no financial benefit to paying the loan off early, if you're paying 0%, so if it's 0%, that means every single dime goes to principal. So why would you pay off free money faster? It makes sense to put your money to work someplace else and just keep making the minimum payment, doesn't it? Okay? So listen to this. Why does every program on the planet, every single program on the planet that talks about debt, focus on paying back the principal? Not one focuses on managing the interest cost, except for ours. It's the only program designed to kill interest on the loans. The cheapest loan you can get is 0% interest. The next cheapest loan you can get is a P.I.L.L. method loan, letting the P.I.L.L. method manage it for you. Okay? That's what you want to focus on, lowering your interest cost. That's what's going on here. So when we get back to this, so you get to ice10k.com, scroll down underneath his picture and click on this button here. It says get your savings and earnings report. Scroll down underneath his picture and accept the cookies. There you go. And just put in your name, your email, your phone number, your zip code, how'd you hear about us, and click on I want to save. When you click on that, it takes you to another form where you put in your financial data. You put in your financial data, one of our assistants will actually take that information, call you, confirm that information so that you can get a savings and earnings report. And once you see your savings and earnings report, they will set up for you a consultation. And in that consultation, you can discover whether this program is going to be for you. And there is a fee for our program. But guess what? I don't want you to pay the fee. Who pays the fee? How about out of the $891,000, this person is not going to pay? All right. How about this client here? Okay. Who had a $634,000 mortgage, 3 loans for $197,000, tried Velocity Banking and racked up 12 credit cards for $201,000 for a total of $1 million. Okay. How about learning how to pay that all off in 9 years and save over $500,000 in interest? It's out of the money the bank is no longer going to get. That's what pays for your lifetime program. I don't need money from you. We just need you to recognize that if we can save you $500,000, that you would take a little bit of that savings and pay for a lifetime program, a small percentage of your $500,000 savings, because your alternative is to give the bank every single dime of that. That's the alternative. Pay this off in 9 years, all right? And then take the money you didn't have to give to the bank and turn it into another $4 million. Well, what about this client? Okay. They only have $390,000. Okay. They have a total of a mortgage, but they have a total debt of $416,000. The bank wanted them to pay $163,000 in interest. Instead, they're only going to pay $41,000 in interest, which means their effective interest rate is 0.64%, saving $122,000. And out of the money the bank is no longer going to get, they're going to use that money to pay for their lifetime program. And they can use the program over and over and over again. They pay once, and that's it. All right. So get a savings and earnings report, and it's free. Go to ice10k.com, get your savings and earnings report, and learn the month, day, and year you could be debt free. And if you are a real estate investor, we're going to work with you to show you when does it make sense to cash out refi, because we're gaining equity this fast. Okay, we're gaining equity this fast, where it would normally take 27 years to pay this loan off. Look here, we're done in a little over 7, and we can start making money at this point. That's where it turns green. That's where we start making money. So if we can pay this loan down this fast without disrupting your budget, that means we're gaining equity faster and a lot cheaper. Cash out refi, start the whole business over again. Does that make sense, everybody? Does that make sense to you? If you want to know more about this, if you want to become an expert in how to become an interest cancellation expert, we're going to be teaching this in Miami, all right, at our conference in January. Come to Miami, all right, where I'm not Miami, but Orlando. We're going to be in Orlando, and the hotel where we're going to be is only a few blocks away from Disney. Yeah, bring the whole family. It's January. It's probably cold where you are. Learn something about how to manage your finances, okay, to the point where you can start building fantastic wealth by learning how to borrow money cheaper. You see, cash is not king in this society, ladies and gentlemen. A wise use of somebody else's money is. Every single thing that you've ever heard, pay cash for everything. Okay, if that were true, if borrowing money was bad, every bank that you ever even heard of would be out of business, because your banks downtown are the biggest borrowers in town. They borrow your money. They make big money with your money, and then pay you pennies on the dollar for the use of your money. Borrowing money can't be bad because banking is huge. Why can't we learn to think like a bank? Why can't we borrow their money, make big money with that money, and pay them pennies on the dollar for the use of the money? Listen, what's good for the goose is also good for the gander. Anybody can learn how to do this. Just like Jonathan was talking about, anybody can learn how to sell money to businesses and make a great profit. Now you can learn how to pay these loans back at a fraction of the cost without getting a low interest rate. You can just keep the interest cost low because you are in charge of that. Well, what about this one? Here's one that's only $75,000 for the mortgage, $21,000 in loans, and only $377 in credit card debt, for a total of $98,000. Okay? And look here. Instead of $40,000 in interest, these folks are only going to pay $16,008. That's it. Why pay all that interest to the bank when you don't have to? I want to show you something that most people do not know. Let me take this off the screen. Hey, I'm going to put something else on the screen. We're going to go over some things in the last few minutes here, okay? Because I have you until let's see. We got a little bit more time left, okay? We've been here for 2 hours and 38 minutes. So let me pull this up on the screen, and we're going to go over some things. Why is it so doggone expensive? Let me pull this over here. Okay. There we go. I need you all. Let me see here. I need to this. Okay, great. Put this over on this screen. I'm using 3 screens here, folks, so you guys can see what's happening. Okay. And we're going to put this on the screen. There we go. And share this with you guys. All right, there you are. All right. So I need to show you this because here's some of the information we all need, but we've never been taught. Okay. The ability to read an amortization schedule is not taught at any level of financial education. Here is what P.I.L.L. method stands for: prepayment of principal, isolating the principal amount, leverage, and liquidity. Albert Einstein called compound interest the 8th wonder of the world. I believe the 9th wonder of the world is amortized interest. Amortized interest is not compound interest. A mortgage is not compound interest, it's amortized interest. Compound interest is what banks pay us. That's compound interest. They make their money through amortized interest. Okay? Compound interest is paying interest on interest. When you have a mortgage, you're not paying interest on interest. You're just learning how to pay interest 360 times to make your loans into 360 separate mortgages. That's what amortization does. Here's the formula that does it. I don't quite understand all of it. I just know it's very expensive. Okay. But if that's the case, then if they have, if the banks have a formula, where's our formula not to pay? We don't have it. Any questions so far from anybody?
Yeah, you just said something that kind of said, so you said the banks don't make their money. You said, how do they make their money again? What did you just say?
Okay. What I'm saying is that banks actually sell their mortgages. Okay.
Mm-hmm.
But what I'm trying to say is that when it comes to banking, they're not they pay compound interest, but they make their money through amortized interest. Compound interest means I'm paying interest on interest. So when you're compounding the interest, you invest money, right?
Mm-hmm.
And then you make some interest that's added to your principal. Okay. And now you're earning interest on the original principal plus the added interest you just made. That's compounding interest. But a mortgage is not compound interest, it's amortized interest. It turns your loan into, if it's a mortgage, 360 separate payments. Okay. If it's a car loan for 60 months, it turns it into 60 separate payments. It's a new car loan every single month, but you're not paying interest on interest. You're paying interest on the unpaid balance. That's the difference between compound interest and amortized interest. A mortgage is not compound interest. Can we all agree with that now?
Yeah, now I understand what you just said, because but when you said Einstein said compound interest
is the 8th wonder of the world. But so I said amortized interest must be the 9th wonder of the world.
Yeah, because the amortized interest is actually more costly than compound interest. I didn't understand that before. That's why I was like, whoa.
Okay.
Nobody ever said amortized interest. They
Yeah.
give you an amortization schedule, but what they've done is they've amortized the interest so that you effectively have a new loan every period.
Yes. And we're going to get into some of what people are going to be learning in Orlando in January. Just a little bit. Here's what banks owners don't want you to know about these loans, ladies and gentlemen. Amortized interest is actually deceptive.
Yeah, that's what I just realized.
Is actually deceptive.
Yeah.
Okay.
Mhm.
So here's what you also need to know. The interest rate you are quoted is not the interest rate you pay. I need you all to understand that. The interest rate you're quoted is not the interest rate you pay. Okay.
So Big Ice, Brother Ice Don.
Yes.
So what you're saying is a 2% interest might seem good, but if I'm paying 2% every single month for the next 24 months, I'm paying 48%. Is what you're telling me?
Effectively, yeah. And you're paying interest on top of interest. Yeah. You're paying, well, not even that. You're paying, that's just wrong.
Is it any wonder my people cannot come up?
Come on now.
The banks are coming up.
And listen, let me tell you something about how lending works. Okay. Lending knows no color. It knows no religion. It doesn't listen. It's the people who in the know, and there's people out of the know. What it really is the matrix. People who are in the matrix or people who are out of the matrix. Okay. And if you're not a bank owner, you don't know what we're teaching today unless you take our course. Okay.
And Don, check it out.
Go ahead.
Also, isn't it a situation where it's like, well, it's all right there in writing because it's so fair. I mean, the reality is you don't understand what you're reading. We don't. So thank you, God, for you in all seriousness working through you to expose it, understand it now. Okay. Like my brother just had that light bulb moment and the ninth wonder of the world.
Yes.
That's a new book right there. I see it coming down.
All right.
But anyway, no, man, that's beautiful. I just appreciate you for taking the time, for those that will take the time to listen and pay attention.
There you go. So here's a $500,000 loan, ladies and gentlemen, $500,000. Okay. It's at 3%. Oh, we long for those 3% loans. And then everybody's talking about why would you pay off a 3% loan? Okay. It's such a low interest rate. Why would you ever do anything with that? Why don't you take all of your money and just put it into an investment? Because the interest paid on a $500,000 loan over 30 years is $258,000. So I'm asking, is $258,000 3% of $500,000?
No.
I'm asking. No.
No way, nowhere near.
So your real cost on that property, if the bank had their way, is $758,000, which means total interest paid as a percentage of principal is 51.777%.
But they tell you hey, you got 30 years to pay it off. Don't worry. Just get started on it.
Okay. But listen, when you understand how amortization actually works and how much interest you can actually save on this, I just need you, for anybody who wants to prove what I'm saying, okay, put two loans in an amortization schedule. One loan of $400,000 in an amortization schedule, okay, and put another loan of $300,000 in an amortization schedule. Let's just say you start out with $400,000 and you prepay $100,000 on that loan. Okay. And now I'm going to tell you how much interest you're going to save. But those who disagree with that, okay, I need you to compare the $400,000 loan and the $300,000 loan. Look at the total interest cost on both loans. And you will see that the interest savings is exactly the same we calculate when you prepay on a $400,000 loan, or if you just start out with paying start out with a $300,000 loan. Okay, both are exactly the same when you do the math. Okay, watch this. Here's what people need to also understand when it comes to borrowing this money. The same loan principal at four and a quarter. Oh, let me bypass that. Let me go to this one. Okay, let's go to this one. Okay, there it is. All right. At 4%, $500,000 at 4%, you're going to pay back what? $359,000. That's a 71.87% loan now. At 5% is 93%. You're going to pay back $466,000 if you're not careful on a $500,000 loan. That's 93% of what you borrowed. At 6%, it's 115.838%. That means you're going to pay back more in principal than you borrow, more in interest than you borrowed in principal. That's 115.838%. And at 7%, where we are now, the bank wants to charge $697,000 on a $500,000 loan. Ladies and gentlemen, let me ask you something. Interest rates are at 7% right now. Do you want to pay 139.5% for your money?
Absolutely not.
No.
You know what it reminds me of? I thought, usury is a thing, right? But that
Yeah,
is,
that's what I'm thinking.
that makes usury look like a little baby.
Yeah.
That's like, that is usury on steroids. I mean, God, oh my God, the punishment God would put on usury, somebody doing, I don't know what that punishment would look like, but back to what we got to do. Go ahead, Don.
Well, listen, man, that's a good point. But here's the thing: somebody mentioned it's all there in writing, right in front of you.
That was me.
It actually is. It's all right there, right in front of you. But it's sleight of hand. I need you to look here and not here. Look over here, but not over here. What I'm telling you is the truth. I'm not lying to you. I'm just not teaching you everything. It is not the bank's job to educate you on how amortization works. Please do not depend on lenders to tell you what is the best way to borrow money and the best way to pay it back. They will never tell you the best way to do anything. In fact, interest rates right now are 7%. The Fed is getting ready, probably in the next quarter, cut another 25 basis points, okay, off the Fed rate. The interest rates will eventually come back down. Okay, they're at 7%. They'll eventually come back down.
Hey, Don, let me say this, Don. The phrase is this, and that covers that.
Yeah.
Let the buyer beware.
Okay.
And we now in this room, we buy money. We don't borrow it. You're buying money. That people are selling money. We can sell money, thanks to Jonathan and his wisdom. You can sell money as well. You don't need a license. But this whole thing wakes it all up. You let the buyer beware.
Okay.
Then they're covered. Hey, it's in fine print or it's in there. Hey, you better know what you're doing, but it's not my job to tell you what you're doing.
Exactly. So let me ask you this question. No matter what the plan is, if by refinancing you're saving money, who has to be losing money?
Oh, you as the buyer, you as the consumer.
Think about it.
No, the other
Now,
side.
think about it.
Yeah, I see. If you refinance, okay, yeah.
If I refinance, if I'm supposed to be saving money, somebody has to be losing money. Who would that be?
It would be the commercial lender.
Okay. Are they ever in that position?
No, they're just not making as much as they were making before.
So we need to make sure. In fact, I'm going to show you how they're actually making more than they were making before by refinancing you. They're not making less. You know how I know? How many in business in here? How many have a business? You have a business? Okay. All right. So some people are in the business of renting properties. Okay. So you have a long time renter that has been in your property for 9 years. Okay. All right. And every so often you're raising the rent. So in 9 years, you have a long time renter in 9 years, you're going to go back to that renter and say, oh, guess what? We're now going to lower your rent by $1,000. Would you ever do that?
No.
No. Okay. So here's the bank that's saying, your own bank, not a different bank, your own bank says, listen, interest rates have dropped to 5%. They are calling you. They're stuffing they're sending you mail. They're sending you email saying it's time to refinance so you could save money. So you can save money. And if you're saving money, that means they're losing. They have you locked in at a higher interest rate. Why would they ever call you to offer you a lower interest rate so that they can lose money? And we never think about asking that question. All we're looking at is, yeah, I would like to save some money. And we jump on that refinance with both feet, not understanding how in the world somebody who has us locked into a higher interest rate will actually be coming out better by offering us a lower interest rate. I'm here to tell you, when you lower the interest rate and when you lower the term, you make it harder to pay the loan off faster and cheaper. And the people who own the bank know that to be true. They're actually going to make more money. But let's get into why. But keep that in mind. And if anybody has any questions in the time that we have left, I can go over that. All right.
But it still benefits you, even at the lower interest rate, to use the P.I.L.L. method to pay it off faster.
But if I kept the higher interest rate, it would benefit me more.
Yeah, it's more effective if you keep the higher interest rate.
Right. So the thing is that
so don't waste all that time trying to negotiate and go back and forth. Just get into the loan with the least amount of money.
Exactly. Let me do this then. Let me get out of this. Okay. I'm gonna stop right here. I'm just going to show you one of the 7 ways a bank makes money on a refinance. Okay, just one of the 7 ways that we've discovered that the bank makes money on a refinance. So we're going to bring up Brett Whistle here. We're going to put in $400,000 loan at 7%. Okay.
Mm-hmm.
And here it is. There it is. So we're going to put that on the screen. Let's get rid of this advertising because it's distracting to me. Here's the payment now. Most people refinance after about 5 to 7 years. Okay. So we're taking a look at this loan. We're looking at it in, let's say we're in it for 5 years. That's 60 months. We've already paid the loan down by $23,000. And we paid out $136,000 in interest on this loan. Now, interest rates have dropped. Okay, let's say we can get it at 5.5% now. Okay, and that is my new loan. That's my loan amount. Did you realize that most people who get a refinance get a brand new 30-year loan? I've been in this loan for 5 years. I'm going to refinance it now to another 30-year loan. Now I have a 35-year loan, don't I?
Right, because you started over again.
You started over again. And some people will say, well, Don, you don't have to get a 30-year loan. You can get, since you got five years in, you can get a 25-year loan. They still make money on it. But let me show you something that most people don't realize. Okay. So this is my new loan amount. Okay. That's what I'm refinancing. I'm going to copy that. We're going to duplicate this tab. We're going to put in our new loan amount here. If you're using Brett Whistle, okay, going to paste that in there. Get rid of this comma because it will not work. That comma will not allow the program to work. All right. So now that's our new loan amount at 5.5%. Okay. We want to take the payment out. We have to delete the payment. or it won't work right. So we got to delete the payment, bring that to 0 now. So we have a brand new 30-year loan at 5.5%. And here's our new loan amount. Oh, wait a minute. I forgot the closing costs. Closing costs are going to be around what? $10,000 on this. It's probably going to be more, but let's just make it easy and make it $10,000. So now I have a loan here of $376,526.41. That's where I am after 5 years. I'm going to refinance this and they're going to charge me $10,000, but they're not going to ask me to pay it out of pocket, are they? They're going to say add it to this loan. So instead of 376,000, it's 386,000. Correct? Am I correct so far, everybody?
Mm-hmm.
So here's my new payment. It is $21.94. My old payment, okay, my old payment was $26.61. My new payment, $21.94. Okay, so let's call it a $500 difference. Here's what's being sold to you. Take a look at the difference you have. All right, you're saving $500, and your $10,000 you paid. Your $10,000 you paid for the refinance, the closing cost. You take your $500, divide it into the 10,000. That will tell you how long you have to stay in the loan to recoup the cost of refinancing. Isn't that what you're told? Isn't that how it's sold?
Mm-hmm.
I'm telling you, that's completely the wrong way to look at it. Completely the wrong way to look at it. You need to look at it this way by looking at your amortization schedule and figure out, I was down to 376,000. What is it going to cost me in interest to get back down to my $376,000 where I was before? That's how you figure out how much this thing costs. So in the first, so I have to pay back the first $10,000 first, don't I, everybody? Pamela, Tyrone?
Yeah.
Okay, because I added $10,000 to the loan, didn't I?
Mm-hmm.
How much does it cost to pay off the first $10,000? In the first year on this loan, look at this, first year, how much of the closing costs have I paid back?
$5,000.
How much interest have I paid on that $5,000 so far?
Yeah, ridiculous amount, $21,000. So
Okay.
you're basically paying $4 every $1 in principal you paid.
Okay. So here's what we're talking about. All right. So if I do this, let's say we finally pay back the $10,000 to get back down to my $376,000 where I started. How many months will it take me to get back to my original amount?
2 years.
Yep, almost 2 years. A total of how much interest am I paying on the $10,000 I borrowed?
$40,000. So you're giving them for for every $1 to recover, you've actually given them back $4.
So I borrowed $10,000 because I didn't have to pay it out of pocket. That means I borrowed it. That means I have to pay it back plus the interest. And since my interest rate is 5.5%, I'm not really thinking about the total interest cost to pay back the $10,000. So let me ask you this, ladies and gentlemen. Here we go. Here's what's happening here. Okay. If you borrow $5 from me and I say, pay me back $5, pay me back $5 in interest tomorrow. What is the interest rate I'm asking for? Pay me back my $5 plus another $5. What's the interest rate I'm asking for?
That's for 100%.
That's 100%. Oh, well, if I borrow $10,000 from the bank, I pay back my $10,000 plus another $10,000 in interest. What is that interest rate?
That's 100%.
Oh, well, what if I pay back $20,000 in interest? What's that interest? What if I pay back $30,000 in interest?
Yeah, that's what I'm saying. It's 300.
And now
40.
I just found out it's going to cost me $40,000 to pay back $10,000. What is that real interest rate? Is it 5.5?
No, it's 400%.
It's 400%. And this is a person with perfect credit who says, I'm making a better deal for myself. And the bank has made money because they tricked them into a 400% loan on $10,000. And if you don't think that matters, what if your credit union sent you an email that says, right now, we're having a sale. We're going to lend you $10,000. You're pre-approved. We're going to lend you $10,000. You pay it back over 24 months, and all we're going to charge you is $40,000 in interest. Would anybody take them up on that?
No.
But everybody I know would jump on this refinance with both feet.
Mm-hmm.
Do you see how much we don't know about this process, ladies and gentlemen? And our goal at the P.I.L.L. Method is to make sure that you understand all of this, and you're not going to get it just by watching a few of my videos. What you will get is inspiration on why you need to know more. Yeah. Does that mean any questions so far? Okay, because I got more to show you. I got more to show you in the last hour we've got here today. Okay, so let me pull this back up. Okay, there we go. And there it is. All right. So we just went over some things. Now, prepayment of principal means this. Every one of you that has a mortgage, has this somewhere in their mortgage papers. What does this say?
Right to prepay.
It's the right to prepay. So does that mean you have to ask for permission?
No, you can just do it.
It's your right. You have the right to prepay. Do you know how many people I do this for? And at the end of my presentation, they ask me, will the bank allow me to do that? I just showed you. It's in your paperwork. You have the right to do it. You have the right to do it. Okay, so here's what it says. You have the right to make payments of principal at any time before they're due. So when you make your mortgage payment or your car payment or your credit card payment before the next payment is due, if you send them money, they have to apply it to principal. They have to. You have a right to prepay. Prepayment means I'm giving them money before the next payment is due. Okay, now, when I make a prepayment, I will tell the note holder in writing that I'm doing so. Okay, so however you tell the note holder, however they want to be informed. Sometimes all you have to do is go to their website. There is a link or a tab or even a line that says principal payments only. You can just write it in there. Just put in your principal payment and make it. That's how they're informed. Okay. However your bank wants to be informed, that's how you inform them. But make sure you're following their rules, because not all banks do this the same way. They still apply the money, but they have different rules of what you have to do to apply the money. It's still applied. Okay. But don't think just because one bank does it this way, all banks do it the same way. They do not. I had one person put $40,000 on their on their mortgage, and what they did was they wrote a check, 40 grand, put in the memo on the check, apply to principal. They wrote out a note, apply to principal only, and wrap the check up in the note, put it in the envelope, send it off to their bank. The bank promptly took that $40,000 and applied it to their escrow account. Because that's the default. That's the default. Yes. Putting in your escrow account is the default if you don't follow their rules. What were their rules? You need to fax us first. This was a few years ago. You need to fax us and tell us that you're doing this. She didn't follow the rules. Yes. Yeah. She didn't follow the rules. Now, it took a few phone calls to correct the situation. I'm not saying they're going to keep it there. All right. But if she had just made the phone call at first, it would have saved her that time on the phone to get it corrected. You see what I'm saying? Mm-hmm. Okay. There we go. So when you make a prepayment, I will tell the note holder in writing that I am doing so. I can make a full prepayment, meaning I can pay the whole loan off, or I can make partial prepayments without any prepayment charge. So there's no charge to prepayment on American residential mortgages. Now, on commercial mortgages, there could be a prepayment penalty, but I don't care about that either. Why?
Why? Yeah.
Why? Because when I figure out how much they're going to charge me, I change the word penalty to the word cost. What is the cost of prepayment? There's a prepayment
yeah,
cost.
that's right. Yeah, they may charge you 1%, 2%, but
yeah. But how much interest did I save by prepaying?
Mm-hmm.
You see, if I saved a whole lot more interest than what they're going to charge me, I'm still way ahead of the game. By using the word penalty, all you're going to do is avoid and not ever do the math.
Mm-hmm.
To figure out that you're much better off by prepaying and saving the interest than the small fee they're going to charge you. Oh my goodness. All we have to do
so
is
they calculate the prepayment penalty on the balance of the principal owed.
Right. You have to find out what their rules are again. Okay. They do. It's done in different ways.
Yeah.
But here's what they will tell you. They will figure out for you what your prepayment penalty is. They'll figure that out for you all day. Here's what they will not figure out for you: how much interest you save by prepaying. They never tell you that. Okay. We will, they won't. So when you know how much interest you're going to save by working with us, and then you find out from them what the penalty is, now you can make an informed decision. Now, we did this for a client in Canada, where we showed them how to save $100,000 by prepaying. When we put all this into the calculator on the website for their mortgage, we found out that their prepayment penalty was $1,200 to save $100,000. What do you think they did?
Oh, they wrote that check
quick.
Quick, fast, and in a hurry. But when I'm only focused on the $1,200 penalty and I don't know what I'm getting, I'm going to avoid the $1,200 penalty all day long. Not even knowing what my benefit is, because we're not taught to figure what our benefit is. Okay? Watch this. This is the third paragraph and the most important. The note holder will use how much of my prepayments? All of my prepayments to reduce the amount of principal that I owe under this note. So I'm bringing the principal down, but then so there is if I do it their way, there's a cost to move the principal from here to here. I'm avoiding that cost in total by prepaying and moving it there in 1 month. I'm eliminating all of the costs they would normally charge me to do this. This is why they only show you this part. If I make a partial prepayment, there will be no changes to the due date or in the amount of my monthly payment. Okay, so your payment stays the same, your due date stays the same, unless the note holder agrees in writing to those changes. And that is something that most people don't even bother to do anyway. So folks, here's what I'm saying. You need to know how much it costs to borrow money and know that you are in charge. You are in charge of how much interest you will pay for that money, not them. What they're asking you to do is a suggestion. And I just don't like their suggestion. I'm going to pay them I'm going to pay them 2/3 less all day, every day. Why? Because when they're asking you to pay, you will give them, they will discount your payment. When you pay, when you want to pay on your own schedule, you can give them money without any interest charge whatsoever. Learn how to give the bank back their money and make it impossible for them to charge you interest. That's what we're doing here at the P.I.L.L. method. Any questions before I go on to the next portion? Anybody else want to come to the stage to ask any questions? All right, we're going to keep on going. If you want to see this, make sure you're over on YouTube watching this. Okay, here is.
When
ahead.
will you post this? When will you post this back up on? It'll be available on YouTube immediately.
Immediately after.
Okay, because some of this I'm gonna need to go back over because
immediately after. You can fast forward even past my stuff and get right to the good stuff. Okay, $200,000 mortgage at 6%. All right. Now I'm going to go over, by using this example, I'm going to go over what happens when you're looking at the amount of money that you have available. Okay. You don't need a certain, you don't need to put a ton of money. People are thinking, Don, I don't have much money. I have a little bit of money left over after all my bills are paid. That's okay. Let me show you why. Here's a $200,000 mortgage. The bank wants $231,000 in interest. We already know that a 6% mortgage means the bank wants 115.838%. Matt wants to come up. Okay, let's invite him up. There you go, Matt. Come on up. Matt is in Clubhouse today. Matt, do you have a question for me?
Yeah, but you can finish your 200,000 mortgage story first.
All right, here we go. All right, so here's a $200,000 mortgage. You have a $199.10 going to principal out of my $1199.10 mortgage payment. That means $1,000 goes to interest. So my $199 is applied to my $200,000. I now owe $199,800.90. The bank uses this number to figure out how much interest I owe. Now, if somebody wants to know how to do that, we're going to stop right here and figure out what is going on with this mortgage. How are they able to charge me $1,000? All right. And some of you, this is going to be the first time that you've seen this. So let me get out of this, go over to my amortization schedule, and we're going to put in a $200,000 loan at 6%. And I'm going to show you how they do it. Okay, payment is $1199.10. All right, so we're going to bring up our calculator on the screen. Okay, is everybody seeing that? There we go. So you put into your calculator 6%. Okay, that's 0.06, 0.06, and then you divide it by 12. Divide it by 12. And you get 0.005. That's the number they really use. When you multiply that by $200,000 times $200,000, that's the original principal, okay? The interest portion is $1,000. Exactly. There it is. So out of your $1199.10, that only leaves this portion that goes to principal. Now you owe $199,800.90. So they do it again. They take your 6% divided by 12, you get 0.005, and you multiply it by 100. Oops, sorry, go back. Got to hit the multiplication button. Take that and multiply it by $199,800.90. Okay, equals $999. So this is what I was saying before. By using amortization, every single month you pay them, you get a brand new mortgage. This is 360 mortgages, ladies and gentlemen. It's not one. It's 360 if you let them have their way. Okay, so let's find out how we can reduce and not give them 360 payments. And I'm going to show you what happens when you have a reduced amount of money to work with. Okay, so let's bring this back. Okay, so I've got $199,000 left And my new mortgage payment now on line 2. My principal payment is $200.10. I apply that to my principal. I'm left with $199,600.80. Okay. So now let's take a look at what we've learned before. If I make my mortgage payment in January, my February principal payment is $200.10. We learned earlier that I can prepay any amount that I want. Let's say I prepay $200.10 in January as well. Okay. If I do that, I'm paid down to line 2 on my amortization schedule in January. And if I do that, guess what happens? I just saved $999 in interest that I don't have to pay. My mortgage goes from line 1 to line 3. I just got rid of line 2 for $200.10, not the whole $1,200 payment that they want. Huh. Well, Don, what if I don't have, okay? What if I don't have $200 to work with? What we need to learn how to do is focus on interest cost, not interest rate. And I show you some things here. This example is called the power of the penny. We just learned that if I prepay $200, I can save about $1,000 in interest on this loan. But what if I only have half of that? I can only prepay $100. Do you realize it saves me $500 in interest? Is it still worth it to prepay $100?
Mm-hmm.
What if I only have $25? Okay, I cut it in half here, cut it in half again. Saves me $125 in interest. What if I keep cutting it in half and I dig down in the couch cushions and I pull out $3.13? If I get that to the bank early, how much interest do I save?
Mm-hmm.
$18.
$6 for every dollar.
Is it still worth it?
Oh, yeah.
Yeah.
Okay. So what we need to see, folks, is I don't need a lot of money to kill a lot of interest. So let me ask you, if you gave me $3.13 and I gave you back $18.75, how many times would you do that?
Repeatedly.
Exactly. The bank has to do the same thing. If you give them on this loan, if you give them $3.13, we're not looking for it, it makes it impossible for them to charge you $18.75 worth of interest. The key to getting out of debt is not coming up with more money. It's paying less interest. That's the key. Let's put up one last screen here, and then I'll take that question. We can keep cutting this in half until we get all the way down to 1 penny. This is why Don picks up pennies in the parking lot. If you're walking with me, don't get embarrassed because I will stop to pick up that penny. Okay? I'll do it
I'm
in a
looking
hot
at
minute.
it. That's on the spectrum, Don.
Listen, I realize I'm on the spectrum. I know. All right, but I'll pick it up. Okay, because I know how valuable all of your money is and putting all of your money to work. There's no lazy money with the P.I.L.L. method. We're going to make sure that you have money to have a great lifestyle with your family. You know, we're not going to tell you like Dave Ramsey, you can't go anywhere. You can't go do anything. You got to drive a 30-year-old car. You got to cut up your credit cards. You got to sell pizzas at night. Take all of that money that you're not spending on fun and throw it at the debt. Once the debt is paid, now you can have fun. And by that time, your kids are 16 years old. And all they heard from you is, I can't afford to do that. What kind of money trauma is that for your children? Why not have a lifestyle where you can plug into your budget? This is how much money I want to spend on my family and to create memories. And any money that's left over, we can optimize the use of that money to kill interest on these loans.
Well, can I think that's some.
Go ahead, Matt.
Yeah. Two things. One is, making that money work for you, right? If you grab those pennies, right? If you grab that extra dollar in the park on the ground, right?
Yes.
It's going to save you a buck, a buck 48 on the back end, right?
Okay.
Versus, right? That's good. That's good, right? And if you actually like take a little bit out of that last paycheck because you got a little bit of a holiday bonus, right? And you put a couple $100 extra in, right? You might get an extra, $500 on interest, right?
Yep.
That's great. That's great. That's great. So the other thing is that, like, yeah, if you have extra money, that's one of the places to put it.
Mm-hmm.
But also, right, that assumes that you probably don't have any credit card debt, and you're probably up to date on all your bills, and you're probably not living paycheck to paycheck, right?
Not necessarily, but go ahead.
So, well, I would say that you should probably be up to date on all your bills.
Yes, you
And make
should.
sure you're not living a lifestyle where you're living paycheck to paycheck before you do this. But if you get that far, right, that this is the next best thing, right?
Mm-hmm.
Pay down your debt, and then pay down like your liquid debt, like your credit cards and stuff, and
Mm-hmm.
because those interest rates are higher than your credit card interest rates are going to be higher than your mortgage.
Well,
interest rate.
I can show you an example of that. So let me make a point of that. Interest rate.
And then what I would also say is, interest on a house, right? If you get like 99% of Americans, you get a 30-year mortgage.
Mhm.
The reason that we're all of us, because I could use that when I'm speaking to the 99% in an assumption, the reason that we're all able to live in our houses today is because we're fortunate enough to be able to have the bank trust us with a mortgage, right?
Right.
Because nobody really has 200, 300, 400, $500,000 to come up with in cash to buy a home, right? And so if that interest
Mm-hmm.
of whether you got in at 2% or whether you're getting in now closer to 7%,
Yep.
right? That interest allows you to live a certain lifestyle
Yep.
today
Mm-hmm.
because you can have a home, you can budget your money, hopefully, right? So the mortgage isn't.
I'm going to ask. I'm going to say this as a lawyer. Is there a
Yeah.
question coming here?
Yeah. So my question is that do you agree with paying down some higher cost interest before throwing it into the mortgage?
Okay, that is a very good question. Okay.
Thank you. Appreciate it.
All right. So let's talk about that. All right. And because I hear this all the time, especially around Christmas time.
Yeah.
Okay. Especially around Christmas time. Uh-oh. I'm my volume is I'm running out of battery power here on YouTube. Okay.
ABC. Always be charged.
All right. So yeah, but I can't charge while I'm using it. That's the whole thing. All right. So let's because I'm using my iPad to talk to you on Clubhouse. Make sure if we go off, you're already on YouTube so that you can see and hear everything because I may be going off here. Okay. So let me do this. Let me plug in, and my volume is going to be different. All right. There you go. All right. So you can still hear me on Clubhouse, but I'm charging now, but the sound is a little different. So let's get out of here. Let's do the two things that you just talked about. All right. So so you're with me, Matt? Can you still hear me, Matt? Okay. I'm not hearing you though. Hold on.
You hear me?
Yep, I can hear you now. Okay.
Okay.
It's a little different now. All right, because I have to charge. All right, so let's go and take a look at. We're going to use this $200,000 mortgage. Okay, and we're going to duplicate this. All right, duplicate this tab, and I'm going to put in a $10,000 credit card. Okay, $10,000 credit card. There we go. At 27%. I know. But if you're using an amortization calculator like this, like Brett Whistle, you want to make sure you're putting it in at 240 months. All credit cards are amortized over 240 months. So I talk to people all the time who pay down their credit cards all the time. They just pay it off. They pay no credit card interest, and they're very proud of it. One person that's talking about that recently is Grant Cardone. Grant Cardone said he doesn't pay credit card interest at all. Okay. Now on the $10,000 balance, all of the credit card, all the experts are telling you that this is several times higher than your 6% mortgage. You need to take care of this because it's killing you. But nobody's actually doing the math and showing you how much interest does it cost you in the first month if I don't pay it off. So your interest on that is right here. $225. $225. So if I don't pay that off with my minimum payment, I'm out of that minimum payment. I have to pay them $225 in interest. Are you with me, Matt?
Yeah. So what you're saying is you're gonna not pay your credit card bills or pay off that interest. You're gonna try and pay down your 30-year mortgage in 20.
No, that's not what I'm saying.
You're gonna use, and then you're gonna use that savings to then go back.
No, that's not what I'm saying at all. That's not what I'm saying at all. What I am saying is you need to understand the math here so that you can come up with a strategy. I'm not giving a strategy. I'm just showing you the difference between interest cost and interest rate. That's all I'm doing here.
No, I understand that.
Okay. Our program gives you a strategy to make sure that the right amount of money goes to the credit card and the right amount of money goes to the mortgage at the right times. And our algorithm does that. I'm just showing you the difference between interest rate and interest cost right now. That's all. Okay. So my interest rate may be 27%, but my interest cost on $10,000 is only $225. But if all I knew was this, and I was talking to somebody like Dave Ramsey would say, pay off the credit card, save the $225. But if I put $10,000 on this mortgage, I knock off 45 payments and it saves me $43,000, almost $44,000 in interest.
Yeah, I guess the obvious question here to ask is what is the personal goal of the individual? Because if you're not taking out any more credit and you're done with looking to borrow anything in the future for the rest of your life, then it doesn't matter what your credit score is. So you can let that you can take a hit on your credit card.
Okay.
Right? Versus if you got another, car loan coming in the future or whatever, you're gonna want to stay out of debt in order to get the best rates and the best terms on future contracts.
Well, let's talk about that. I can only talk about because I have ADD. I can only talk about one thing at a time. You're bringing up some very good points. Write down the rest of your points. Let's talk about that.
Yeah.
So for me, I don't care if I get a low interest rate or not. The higher interest rates are actually better. Can I show you an example? Let me show you something here. Because, see, if I pay my debt on time and I keep my utilization low, okay, I will get rewarded with a high credit score. That's my reward, a high credit score, so I can get low interest rate loans. But it doesn't show me it doesn't mean that it's a low interest cost loan. A low interest rate doesn't necessarily mean low interest cost. Can I give you an example of that? Okay. So you're bringing up some very good points, Matt. And this is why when you come to one of my seminars, you have to forget everything you've ever been taught to understand this, because we're everybody who gives you this kind of information, it's called best practices. But Dave Ramsey nor Susie Orman.
I think with these kind of things, again, it's all predicated on what your situation is and what you're willing to, right? These are all come with, like, all of these things come with something to sacrifice and something to gain.
So Matt, let me ask you this. Is there ever any reason for anything to pay more money in interest than you need to?
Yeah, that's the thing.
More interest?
Yeah, to pay more interest than you need to. No matter what your situation is, I'm going to choose to pay more interest than I need to.
No, of course not.
That is the only thing that we talk about here at the P.I.L.L. method. How to keep, let me finish my point. Let me finish my point. Let me finish my point.
What we said before.
Let me finish my point, Matt. Matt, if you don't let me finish my point, I'm going to take you off the stage.
Well, sorry, I was just going to make a quick point.
Okay, and I don't want you to make a point now because I'm talking.
I disagree with that point.
Okay, well, you can, but let me finish with it. Matt, I'm going to take you off the stage if you keep talking.
Oh, I'm sorry.
Okay. All right, so here's what we're talking about. What we're trying to do for our people is make sure you keep all of your costs the absolute lowest you possibly can when you're managing your money. Just like when I buy tires, if I can get 50% off on my tires, there's no benefit to paying full price. Now you can make your point.
So sometimes there is a benefit in paying interest.
No, there isn't.
Well, sure there is. We just talked about the mortgage example.
Well, let me.
You don't have $500. You don't have $500,000 to come up with in raw cash to purchase that home, right?
Okay. Right.
So what are you going to do? You're going to say, well, I do have $2,900 to spend each month.
Mm-hmm.
Right. So with that and a 5.5% interest rate, now I can live a fairly decent lifestyle, making my salary, and I can now get into that house.
Right.
So I'm gonna pay. Well, that's the thing, right? So
Matt, you have to get to your point faster.
Okay.
What's your point?
My point is that sometimes an interest rate of 5.5% is better than an interest rate of 0 because it allows you, right? That loan allows you over the course of time to purchase something that you wouldn't otherwise be able to afford.
Okay, so but that is the interest rate, but I control the interest cost on that 5% loan. You see what I'm saying? I'm going to get the loan.
Yeah, obviously, you want the interest to be 0.
No. No, actually,
you don't care about the 0. Yeah.
I don't care about that.
If you can prepay the whole house after the first month, you would do it.
No, that's not what I'm talking about either. Nope, Matt. Everything that you've ever learned, I'm going to. If you want to give me one point at a time, I guarantee you that everything you've ever learned about lending is wrong. You need to do something different. And here's one of them. Okay, I have in my pocket right now $1 in one hand. I have 27 cents in the other. I got to pay $1 in interest to the bank to get 27 cents back from the government. And for my tax benefits for mortgage interest. How does that hurt the bank? Does it hurt the bank at all?
No, it doesn't. It doesn't impact the bank at all.
Well, I mean, you're bringing a whole other variable to.
I'm just saying. It's these variables that matter. It's these variables.
Not necessarily.
Okay, so if I'm,
yes, your taxes are predicated on a whole bunch of other things.
The point is this. Why should I keep a mortgage to get the tax break?
You shouldn't. Ideally, nobody would get a mortgage, but again, I can't afford, and you can't afford a $500,000 house in cash.
Okay, and listen, I love the bank. I'm not anti-bank. Yeah. I never pay cash for houses or cars. I always borrow the money. Borrowing money is the best thing on the planet. I'm not anti-borrowing. I'm anti-paying too much money to borrow. You see, that's the difference. If I'm borrowing money, why should I pay retail to borrow the money when I could pay wholesale? to borrow the money. Does that make sense, Matt? So if somebody says, Don, to buy this house, to buy this $200,000 mortgage, all right, that we have on the screen right now, and if I keep it for 30 years, it's going to cost me at 6%, it's going to cost me this much money, okay? $231,000 in interest. All right, but I get the house and I have a place to live in for the next 30 years. Or I can pay the bank $231,000 to borrow their $200,000, or I can pay them $75,000 to borrow their $200,000. Which would be better? So I'm not anti-borrowing. I'm with you on that. What I'm with is, how do we manage paying the bank less for something that we're borrowing? Now, listen, there are people out there that are clipping 10-cent coupons to buy a can of beans. They're looking at an app on their phone to figure out how they can save 3 cents on a gallon of gas. There's absolutely no reason to pay the bank hundreds of thousands of dollars extra in interest when we don't have to pay them that. And that's why we're here, Matt. Would you agree with that? I guess Matt's through talking. Okay, because we're not hearing him. All right, folks. So that's what we're saying. Anybody else have any comments or to help Matt here, out here?
No, I guess the thing that's there for me, and I'm gonna have to drop off here in a minute.
Yeah.
The goal or the story is, it's not how much you earn, it's how much you keep.
Yes.
And at the end of the day, what the P.I.L.L. method is saying, that regardless of what your goals are, you're going to pay the least that you have to pay to get what you want. And if you can pay less to get what you want, why would anybody not do that?
Exactly.
The only reason why you don't do that is because you don't know.
Yeah.
And in the capitalistic society, you pay for what you don't want to do, and you pay for what you don't know.
Yep. So
once you know it, once you know it, you have an option. Now you can do it. It just don't make sense to do it.
Yeah. What we want to do is make sure that I can give back the bank their money and make it impossible for them to charge me interest, even if all the extra money I have is $1.56. It will save me $9.38 on this mortgage in interest I don't have to pay. Now, if somebody's budget is so tight that they don't have $1.56, then that is way too tight. There's something else going on there. Yeah. And what I found out over the years is this, Matt, and anybody else who's listening. For people who say they're living paycheck to paycheck, most people are not. They're spending paycheck to paycheck. They're not living paycheck to paycheck. I'll give you an example. And this happens so many times because we deal with thousands of people per year that get a free savings report from us. They have to tell us their income, what their debt is, and all of that. So once we get that figured out so that we can do a savings report for them, then we're finding out how much it actually costs them to live and how much money they're making. Most people we talk to, believe it or not, even accountants, they don't know how much money they're making unless they stop to figure it out. They don't know how much money they're spending each month until they stop and figure it out. So one of the questions that we ask is, how much money do you have in discretionary spending? How much money is left over after all the bills are paid? This one lady says, well, what if I don't have any money left? I said, okay, let me ask you a question. Here's the question. Do you make enough money every month to pay all of your bills with your income? Her answer was yes. I said, do you ever have to dip into your savings to make up the difference to pay your bills? She said, no. I said, do you ever have to use a credit card to pay bills because you don't have enough money out of your income to pay bills? She says, no. I said, okay, let me send you a budget sheet. Okay. So that she can put in all of her budget, everything that she has to pay for during the month, even the money she spends on fun, put this in here, and how much money you make. So I'm waiting for her to send that back to us. It took her, what, 2 or 3 days to get it back to us. I said, well, what took you so long? She said, I had to do the budget sheet 3 times. I said, why did you have to do it 3 times? She says, because it kept showing me I had $2,000 left over after I paid all my bills. That's why. Most people don't live paycheck to paycheck. They spend paycheck to paycheck. Here's another thing that they do wrong. If they have more than one credit card, they pay, because they've been told not to pay the minimums on the credit card, they pay more than the minimum on all 5 balances, which is a mistake. Take that money and gang up on one, even if it's the wrong one. Do not pay more than the minimum on all of your credit cards. Take that money, put it all together, and focus on one of those credit cards. It will melt away so much faster, and then you can go to the next and to the next and to the next. Do not bother putting extra money on all of your loans at the same time. Attack one and then the next one. Okay? That's how you do that. Only attack one loan at a time. Don't attack all of your loans at the same time. It will reduce the amount of cash you have available for other stuff. And that's why it may feel like paycheck to paycheck, because we have learned how to treat our money the wrong way. So, ladies and gentlemen, there's a lot that people can learn from the P.I.L.L. method by learning how to handle their money in a way that's different from Susie Orman, that's different from Dave Ramsey, that's different from any of the financial
method and all this stuff. Yeah.
Right. The snowball method, the avalanche method, they're all antiquated. They're all antiquated. Has anybody heard of putting money away in an emergency fund?
Yeah.
Okay.
Yes.
About 6 months worth.
Mm-hmm.
Okay. I'm sitting in an office of a banker. Okay. And his mortgage is around $400,000, and at the time it was at 4.5%. Okay.
Mm-hmm.
So there we go. Calculate that. He says, because of what I'm making, I need about $36,000 in the bank to, so that if something happens, I have, I have 6 months worth of expenses in here. Okay. 6 months worth of expenses. That's at that time. And I said, does it make sense to you to pay $70,000 or $80,000 to avoid paying $5,000? He says, what? I said, does it make sense to you to pay $70,000 or $80,000 to avoid paying $5,000? He says, no, it doesn't make sense. What do you mean? So I had him pull this up on his computer, Brett Whistle, up on his computer in his office at the bank. He's a junior VP. Okay, junior VP. So I said, now you've got $36,000 in the bank. He said, yeah, okay. And I'm saying, what if you had your mortgage here and you understood how it works? You could put all $36,000 on this mortgage. Let me show you what would happen if I put $36,000 prepaid on this mortgage. We're going to scroll down to $36,000 right about here. If he prepaid that money, that would knock off over 5 years off his mortgage and save him about $87,000 in interest he doesn't have to pay. He says, well, Don, now I don't have any cash reserves if something should happen. I said, well, you're in the bank, you have good credit. Could you get a line of credit or even a HELOC? He said, well, yeah, I just paid this down. Of course I can get, I said, could you get a line of credit, a personal line of credit, or even a HELOC, home equity line of credit for $36,000 or more? He says, yes, I could. I said, now, how much is your bank charging you for the $36,000 HELOC or line of credit? He says, if I don't use any of it, they're not charging me anything. I said, wait a minute. You're telling me that you have $36,000 available to you, that it doesn't cost you anything if you don't use it? He said, yeah, for a situation that may never happen. He said, yeah, I never thought about it that way. But what if one of you or your wife can't work for a while and you have to start using that line of credit? Let's say you use it all up. You use all $36,000 over the next 6 months. And in 6 months, your financial situation has changed. You are now you're back to full employment. Now he says, now I have to pay back the $36,000. I said, okay, let's pull up another amortization schedule. We're going to put in the 36,000. Okay. $36,000. Oops. 36,000. And what interest rate can you get? So he told me 6%. Okay. We're going to put it in at 6%. And based on the amount of money that you're making, what term do you want? He chose 60 months. All right. There we go. And let's take a look at that. His payment was $695.98 a month. He says, yeah, I probably pay that off a lot faster than that. I said, okay. But what if you decided to make every single payment? You didn't pay it off early. What would be your total interest cost on that loan? Let's take a look at it. $5,758 to borrow the money. So why would you put $36,000 in the bank, making 1/10 of 1%, or even if you put it in your money market and made 3%? Okay. Why would you put that kind of money in the bank just to sit there for something that may never happen when you could borrow the money? And if you paid the full boat on it, it would only cost you $5,700. Instead of taking that money and putting it on this mortgage,
Paying off 5 years.
Paying off 5 years.
Well, 6 years, really, that one, yeah.
Okay. 5 years. Okay. 5 years. Okay. A little over 5 years.
36.
I did say 36, didn't I?
Yeah, that's 6 years.
Yeah, there you go. Is this the right, am I at the right mortgage? Okay, wait a second.
Well,
no,
yeah,
I'm not on the right one.
It was 400,000.
That's the wrong one. Here's the right mortgage. There it is. 36,000 on his mortgage saves him $87,000. That's the reason for my question. Would you pay $87,000 in order to save $5,000? And he says, now I see what you're talking about. It will cost me $5,000, $5,700 to borrow the money to take care of my emergency. I could take this cash and put it on my mortgage and save $87,000. Why would I ever pay $87,000 just to avoid borrowing money for an emergency? I don't use cash for emergencies. I borrow the money because it's cheaper. Goes against everything you've ever been taught, doesn't it?
Yeah, it does. It does.
You see, folks, we have been taught wrong. Now, I don't borrow money that I don't have. Okay. If I borrow money because I have resources, if you don't have resources, you shouldn't be borrowing money, period. Okay. Because it eventually has to get paid back. You want to be able to pay it back, but you also want to take a look at all of the variables here. And while I'm dealing with debt, I want to pay the least amount that I possibly can. And here's the last point I'm going to make for today, because we're almost done. We got 7 minutes left in this session. This is why I never pay cash for houses or cars. I always borrow the money. Why? Because I can borrow the money at an effective interest rate of around 1%. If I could borrow the money of an effective interest rate around 1%, why would I take $400,000 out of my investment, making 6, 7, 8, 9% to pay cash for the house so I don't have to pay any interest, when I can borrow the money so much cheaper and allow my money, my cash, to continue to work for me? You see, it's an opportunity cost question. If you spend your money one way, you can't also spend it another way, ladies and gentlemen. That's why we have the P.I.L.L. method today. So in our last few minutes, if you want to become a interest cancellation expert, then what you want to do, okay, is make sure that you get down to Orlando in January. Get all the information you need about our conference, where we're going to spend all day going over a lot of things that you've never even heard of, not even on our broadcast. All new information. Text the word PILL to 256-215-9496. One more time, it's crawling across the screen. Text the word PILL to 256-215-9496. And then you can join us so that you can become a financial expert, that you can teach this to your family and start building generational wealth. If you want to know sooner rather than later how to save money on your mortgage or other debt and pay it all off in an average of 7 to 9 years, then what you want to do is go to ice10k.com. ice10k.com. All right, we'll put that back on the screen. ice10k.com. Scroll down underneath ET's picture and click on Get Your Savings and Earnings Report. It's free. You can know the month, day, and year you could be debt free, and the amount of interest that you would save, and how much of the bank's money that you're saving, a small portion, pays for this lifetime program. And if you're a real estate investor, you can put mortgage after mortgage after mortgage in it, pay for it one time. It's a lifetime program. Coaching comes with it, and customer service. 800 number for customer service. Oh my gosh. We have it all there for you. Okay. So I want to thank everybody for being here. For the folks who are on the stage, do you have any comments or questions in our last 4 minutes?
Just out of curiosity, reading the book, The P.I.L.L. Method.
Yes.
That's how long of a read is that?
I've had people read it in one day.
And
it's only 100 pages.
Oh, okay, cool. I'm calling it up online. And so after you go through that book, you will have what, a good foundation, 30%, 40%, or what is the?
You will understand from that book why you need why you need a calculator to do all of the math that you need to do to figure out what is the least amount of money you can pay in interest on loans. It's not something that you can do on your own. It's impossible to do on your own.
Yeah, too many variables you got to hold in your head.
Too many variables for you to understand what's going on here. And here's one of the reasons. Okay? And you can get this 5 factorial. 5 and an exclamation point. 5 factorial means there's 120. If you have 5 variables, there's 120 different ways that you can arrange those variables. Okay? One of them is optimum. The rest you're losing money on or losing time on or whatever it is you're trying to optimize. Okay? There's one right way to align those variables, the 120. We've identified 10 variables that we're going to be going over in Orlando. 10 variables. 10 variables, that's 10 exclamation point. Okay. 10 exclamation point. Boom. That's 3,628,800 different ways to look at your finances to come up with the one right thing to do in this month on this day of the month to save you money. And then you have to do it all over again for next month. This is why you need a calculator to do all of the math to say, this is the one thing you need to do in this month on this day of the month to save the maximum amount of interest. The reason why we need to do all this, because we have been told over the years, it is simple to pay off your debt. And if it's so simple, all you have to do is whatever they're telling you. Why is it that 9 out of 10 people you know will never be out of debt? Because they're following best practices from the financial experts. You need something new. You need something better. You need something different.
All right, man.
Okay.
Hey, look, I'm gonna make it a point to try to read the book over the week of the holiday.
Oh, sounds good.
And
sounds
then I'll
good.
come back to you and have a conversation.
Excellent. Pamela.
When is the next installment on this P.I.L.L. method?
The next installment will be Friday.
Okay, day after Thanksgiving. Okay.
Right. It won't be live. It'll be a replay.
It'll be a playback of this one, right?
No, it'll be a replay of one of our other shows.
Oh, okay.
Yeah, but this will be up forever. You can go to our YouTube channel and just click on the live, and all of our lives will come up. It's 4 years worth of information. You probably never finish watching all of them.
Okay. And you've been doing one show a year for 4 years, one show a week for 4 years.
No, actually, I used to do 4 or 5 shows a week. Then we cut down to 3. Now we're cutting down to 1 because we have so much content.
Yeah. Okay.
Yep. So I do 1 live, and then the other 2 shows are replays. Yep.
Okay.
Because when people come on, we have almost 10,000 new 10,000 people now. When people come on, this is the first time they've seen this, so they get to see a lot of content. You know how many people call us from watching these videos? Oh my gosh, crazy!
That's awesome.
All right, folks. Any other questions or comments before we go?
No, I'm good. Thanks,
all right.
Thanks for the support, and then we'll be following back up with you. Okay.
Sounds good. Sounds good. All right, everybody. We're going to be out.
Thank you.
All right, folks. We're going to get out of here. We're going to be. We'll be back live next week. Okay. So thank you, everybody. Thank you for being here, and we'll see. You're so welcome, Pamela. We'll see you next week.